We will begin very shortly. Please take your seats. So this will be our third session of the day. Session is on sanctions, export controls, and dispute settlements. We have three presenters in the following order. We have Fabio from the University of Washington. We have Mr. Ryo Makioka from Hokkaido University. And the last presenter will be Mr. Eric Arias from the World Bank. As per usual, 40 minutes are allocated to the presenters, 25 minutes for their presentation, and additional 15 minutes for open discussion. As per usual as well, please allow the presenters 5 minutes to start off their presentation before you may ask clarifying questions. Welcome to the stage, Mr. Fabio Gironi.
Thanks to all of you for being here. Thank you to the organizers for the opportunity to be in this conference, see friends, and present this paper. I see it's joint work with Dyson Kim and Kemal Ozan, and they really deserve all the credit for what is interesting in this paper. So it's motivated, obviously, by the recent events, Russia's full-scale invasion, and the fact that this prompted governments of many countries to impose sanctions. Now, something that's especially interesting for the case of sanctions on Russia is that it's not since the 30s that as large an economy has been placed under sanctions. So at the time the war began, Russia was the 11th economy in the world by nominal GDP size. Different from the situation in the 30s when sanctions were imposed on large economies. Russia is a major exporter of gas and oil, and the global economy is a lot more integrated than it was when sanctions were imposed in the 1930s. And so the goal of this paper is to understand the transmission and the effect of sanctions when we're looking at a world of interdependent large economies. We are interested in understanding the effects of sanctions short, medium, and long term on standard macro variables and prices, the exchange rate, measures of economic activity. We're interested in understanding who is most affected by the sanctions in the interdependent world. Is it a targeted country, or are there situations in which effects of the sanctions can be even larger, the sanctioning ones, in terms, for instance, of welfare? And what are the effects of third country decisions? Now, what we do in paper is to start with a two-country model of international trade macro dynamics. In each of these two countries, there are households that decide on asset holdings, consumption, and labor supply. And there are two sectors of production in each country. There is an upstream sector that is going to produce a commodity, think of it as gas, and there is a downstream sector where there are monopolistically competitive producers of differentiated consumption goods. In this downstream sector, there is endogenous producer entry subject to sunk costs, and producers have heterogeneous productivities, and there are fixed trade costs. The model also features incomplete international financial markets. For those of you who have seen the work that I did with Mark years ago, this is essentially a version of that model that is augmented by having a gas producing sector in each country, and by allowing for some important asymmetries between the countries in the model. So we're going to study, in this context, we're going to study sanctions as exclusion from international market. So in the consumption goods sector, for instance, as it is standard in the Melitz model, there are going to be endogenously determined productivity cutoffs, such that it's only the firms with productivity above those cutoffs that engage in international trade. Okay, now imagine a situation where, in addition to the standard Melitz cutoff, there's also a new cutoff. Think of it as an exogenously policy-imposed cutoff. The government says, all right, you firms above this threshold, you're no longer allowed to export your product to the sanctioned country. Or you firms from the sanctioned country above a certain threshold, you're no longer allowed to sell your product to us. Okay? Of course, in the limit, you could say the government imposes that all of the firms that would be engaging in international trade are prohibited from doing it. As initial exercise, we focus on essentially exclusion from international trade or the largest firms, because we think those are the easiest to identify and target with sanctions. When it comes to international gas trade, what we explore is what happens if a gas trade ban, if a full embargo is imposed. And when we think of financial sanctions, we explore what happens if a fraction of the household in the sanctioned country is excluded from participation in international asset markets. We obtain some analytical results, and in particular focusing on the determinants of the price of gas and of the real exchange rate. And then we do numerical illustrations of the model and the channel that determine the dynamics of this variable. So for instance, in terms of the result, consider the case in which the home, so we're going to treat foreign as the country that is sanctioned. And so consider the scenario in which home imposes export sanctions. What this is going to imply is that the most productive home exporters are no longer allowed to export to foreign. Now, the most productive home exporters, as is standard in the Melit model, are those that charge relatively lower prices. Their exclusion from the export market, therefore, is going to imply that the price index in the foreign country is going to increase. And home exports, on average, are becoming more expensive for foreign consumers. The fact that the average price level in the foreign country rises is going to imply home real depreciation. In the foreign economy, what's going to happen is that foreign consumers are going to substitute previously imported home products with domestically produced products. Okay? So there is going to be an increase in the demand for inputs in the foreign country, which is going to translate into higher gas price and higher wages in the foreign country. What about gas? What about the ban on gas? What's going to happen is that foreign loses the revenue that it was receiving from exporting gas to home, and it's going to try to replace this lost export revenue by increasing production and export of consumption goods. So there is a reallocation of resources in foreign toward the consumption sector. Less productive foreign firms are going to start exporting to home. Less productive exporters charge relatively higher prices. So what's going to happen is that in this case, it is the home price index that increases relative to a foreign one, and there is going to be home real exchange rate appreciation as opposed to depreciation. What about financial sanctions? Well, in the case of financial sanctions, something that turns out to be very important for the results is the size of the fraction of households that is actually excluded from participation in international asset market. For the effect of financial sanctions to be significant and quote unquote to inflict significant pain on the sanctioned country, you want to exclude from the international asset market essentially as close as possible to all of the foreign households. Otherwise, what is going to happen is that those who continue to participate in the international asset market essentially can do international borrowing also on behalf of the household who are no longer participating in the international financial market. So, for instance, when in our model, when the financial sanction is imposed, what happens is that foreign households have an incentive to front load investment in firm creation, to borrow for this purpose before the impact of the sanction is fully felt on the economy. And if the sanction if the fraction of households is excluded is not sufficiently large, it's still the case that the non-sanctioned households are going to be able to borrow internationally to finance that investment in business creation that is important for the country to do. Now, in all of the scenarios, for all the sanctions that we consider, it turns out that extensive margins are important. Extensive margin of entry into the domestic economy, extensive margin of entry into export. These margins are very important for the result. And if you want to extract a policy bottom line from the exercises that we do, it's going to echo recent work by Barry Eichengreen and co-authors who argued this by using historical data to study the effects of sanctions. They argued that using the exchange rate as a metric for success or failure of sanctions is not the appropriate thing to do, because what happens to the exchange rate is going to depend on many things that are going to interact ultimately in determining whether the exchange rate appreciates or depreciates, as I was alluding to at the beginning of this preview. But this is not necessarily determining what the metric of the impact of the sanction on the sanctioned economy or on the sanctioning one should be. All right, there is much related literature that has been emerging on the topic of sanctions in the last few years. Some authors started paying attention to this topic actually before the latest large-scale invasion of Ukraine, and then, of course, the recent invasion triggered a wave of interesting literature. Relative to these papers, I think our contribution is in studying a joint international trade and macro framework, which allows for studying dynamics from the short-run effect of sanctions all the way to the transition to the new steady state, and an environment in which we are looking at interdependence between countries of significant size. So, for instance, in the that set of papers, there are some papers that explore quantitative, multi-country, pure trade analysis, and there are some papers that do international macro exercises. For instance, Oleg Itskoki and Dmitry Mukin have a really interesting paper on the effects of sanctions in the international macro approach. But in their paper, Russia is treated as a small open economy. Right? And so you cannot explore what is the impact of imposing sanctions on Russia on the global economy, and what are the effects that the sanctioning country bears from imposing sanctions. So that, I think, is our contribution. And then, of course, we contribute to a literature on international trade and macro, joint international trade and macro models and exercises that include many more papers than I could list. Let me tell you a bit about the model. So I'm going to focus on oh wow, speaking to. I'm going to focus on the home country. Household maximizes expected intertemporal utility, standard Dixit-Stiglitz consumption aggregator and demand function. Gas production. So each of the two countries is endowed with an amount of natural gas. And we assume the endowment of natural gas is larger in the foreign country. Usable gas is produced by combining the endowment with labor. And then the gas that is produced can be used domestically or exported. And the assumptions that we make are such that in equilibrium, what happens is that the foreign country does not import gas. The foreign country exports gas. And it is instead home that is going to import gas from foreign. And there's a standard labor demand condition for the gas production sector, and absent sanctions, the prices of gas in home and foreign are related by a no arbitrage condition, adjusting for an iceberg cost. What about production of the consumption goods? Well, that uses gas and labor in a Cobb-Douglas combination, and is done by firms with heterogeneous productivity, is denoted with lowercase z. They are going to produce in every period until they are hit by an exogenous exit shock. So firms, these firms are monopolistically competitive, choose prices to maximize profits, and when exporting, they are subject to a fixed export cost, okay, which is measured in units of effective labor. So in order to find the real value of that export cost, you have to divide it by the exogenous aggregate productivity shifter and multiply by the real wage in the final production sector. And it is because of this fixed cost that there is the usual Mealy productivity cutoff for exporting. So standard markup pricing over marginal cost and standard optimal input demand implication for Cobb-Douglas production function. Now, as in the standard Mealy's model, we can define those productivity averages such that the model essentially behaves like a model where you have a certain number of firms with productivity equal to the average that are producing domestically and so on for exported. Entry, okay, prospective entrants are forward-looking. They compute their expected post-entry value, given by this expression, the expected present discounted value of the post-entry stream of profits that they can make on average. And this is discounted with the household stochastic discount factor because firms are owned by households. So the entry condition equates this value to the sunk entry cost. And the assumption that we make, there is this exit shock at the end of each period, implies this law of motion for the number of producers in each country. Now, we assume that firm creation and the production of differentiated consumption goods is easier in home than in foreign. Okay? And so whereas foreign has an advantage in producing gas and exports gas, home has similar advantage in the final consumption. The household trades asset, supplies labor. You can find standard Euler equations and labor supply conditions. You can aggregate all the equilibrium conditions of the model, find an expression for the trade balance, the current account, the law of motion for a country's net foreign assets. And so I'm going to, because of the time constraint, well, not quite skip it, but I'll go super fast. When you impose all the equilibrium conditions, even if this model is more complicated than my original model with Mark, and it has this steady state asymmetry with a country that is exporting gas and the other that is exporting consumption goods, you can still find analytical results that help interpret what happens with numerical exercise. So for instance, the price of gas, the equilibrium price of gas ends up, once all equilibrium conditions are imposed, it ends up depending on domestic consumption, on foreign consumption and the real exchange rate, and on the total amount of product variety that is available in the home country. And each one of these terms has intuitive interpretations that you can see here in approximately 5 seconds. This beauty, this is the real exchange rate. Okay? And it looks long and complicated. It turns out that every term has an intuitive interpretation. So toll is the same thing that toll is in my paper with Mark, the relative price of effective labor in the two countries. Okay? And what that term implies is, so if toll moves down, that means that home effective labor is becoming more expensive relative to foreign effective labor. As long as the share of non-traded goods in consumption is larger than 1/2, that's going to imply a real appreciation. This here, this is the average productivity level for foreign exporters. Okay, so if the average productivity level of foreign exporter increases, that's going to imply a real exchange rate depreciation because exporters on average charge lower prices, and this is going to lower the average price level in the home country. This is the average productivity level of home exporters. Okay? If it is this average productivity level that increases, then you're going to have real appreciation for the opposite reason. These terms here capture extensive margin effects. This is relative share of domestic goods in total product variety available to consumers. This is relative share of imported goods in total variety. If this increases, you're going to have appreciation. If this increases, you're going to have depreciation. And again, this has to do with the difference in average prices that are set by firms that trade versus firms that do not engage in international trade. And to skip this, we do then numerical illustrations. So for instance, the calibration is completely conventional parameter values. Here are the Green, you see the responses to the imposition of export sanctions. Top 10% most productive home exporters drop out of international trade. In blue, you have the import sanction, where the top 10% most productive foreign exporters are excluded from international trade. And in red is what happens when you have the combination of the two types of sanctions. So, for instance, when you look at the export sanctions, right, the most productive home exporters are going to drop from trade, and this is associated with a decrease in the home export cutoff. Okay, because what is happening is that more home firms are entering international trade in an ultimately this is driven by a replacement of export revenue. But the fact that relatively lower productivity home exporters start exporting, these are charging higher prices. Okay, the foreign price index increases, real exchange rate depreciation. This is what you see in this diagram. I'm going to skip the rest. Import sanction, opposite effect. The home export cutoff here increases. Okay, and you're going to have a real appreciation as a consequence of the sanction. Gas trade ban, a gas trade ban causes, in the home economy, there is going to be obviously an increase in the demand of the domestically produced gas, and there's going to be an increase in the price of gas that is faced by final sector producers. This ultimately has a negative impact on consumption in the home economy. There is an increase in home marginal cost, and therefore an increase in the average price level of the home country and real appreciation. Financial sanctions. So blue is where essentially all foreign households are sanctioned. Red is 80%, green is 90%. And you see, it makes a big difference if you're sanctioning 80% or 99%. And that has exactly to do with what I was telling you. If you do not sanction basically all of the foreign households, the ones that are still participating in the international asset market are still going to be able to borrow internationally on behalf of the entire economy and ultimately be able to finance that front loading of producer entry that the foreign economy wants to do in response to this type of sanctions. So what about welfare? In terms of welfare, if we try to evaluate the welfare effect of the sanctions, the good trade sanctions are the ones that are most effective in terms of hurting foreigners with less welfare cost for home agents. In the case of the gas trade ban, that in welfare terms ends up being more costly for home agents than for foreign agents. And this is the last thing I'm going to say. This was a two-country exercise, and of course, as a two-country exercise, it cannot explore very important questions. So we have done also a three-country version of the bill. And in the three-country version of the model, not surprisingly, if you impose a gas embargo on foreign, the negative effect of home welfare is going to be much smaller if home can import gas from a third country in the model. And similarly, the sanctions on good trade or financial sanctions are going to have a much smaller impact on the targeted country if this can trade with the third country. And the last point, it turns out to be very important to coordinate sanctions, to impose, to synchronize the imposition of sanctions across countries if these sanctions are to be really effective in terms of their impact on the sanctioned country. That's it. Thank you.
Thank you very much. As nice a paper as we all expected. Thank you. So two questions. One is about the instrument. If a ban, supposing a government could rationally expect imperfect enforcement or in a way negative selection in the ban because you end up picking and preventing the most efficient firms. So there's that inefficiency cost also. So supposing instead of that, if you expected it, you said, I'm not going to do a ban, I'm going to do an export tax. So what are the welfare implications of that? And then I have one other quick question, which is that your partial sanction of the consumers is a little bit analogous to this whole point of if there's a third country, because if there's someone who can perform arbitrage, it's like Omar's point about the border tax, if there is a neutral third country. But again, in terms of welfare, is it that when you impose an ineffectual sanction where third countries perform arbitrage, are the welfare implications different? Or does it hurt you more or does it hurt you less?
So I'm going to disappoint you in the sense that both questions are very important. And your first question is tied to the issue of optimal design of sanctions and optimal choice. For instance, what should it really be the highest productivity firms are the ones that are excluded from international trade, or should it be a different mechanism? Something that we've been working on most recently is a different type of setup in which what is happening is sort of like a Calvo Ferry mechanism, such that within the whole set of all the trading firms that are above that Melitz type cutoff, right, with some probability, regardless of your specific firm productivity, you're going to be tapped by the Calvo Ferry and you are excluded from trade. And then a question that is interesting would be, what is the optimal choice of this Calvo Ferry productivity, which you're thinking of as a policy instrument, versus the optimal choice of a policy implied threshold for exporting in terms of the relative cost imposed on the domestic economy. But I really do not have a sense yet of what would be the results and where the welfare comparison would bring us, because this is literally the things that we ourselves are thinking about. And Harry, for instance, I found out yesterday of Harry's work with co-authors on the optimal imposition of sanctions. That's in our plan for what we want to do in the future. It is precisely to look at an endogenous choice of the optimal menu of sanctions in terms of quote unquote inflicting, if one wants, inflicting maximum pain at minimum cost. A very open question. And your second question, you're right. The imposing the sanction only on a fraction of the foreign households has the same flavor as home, suppose there is this rest of the world third country, home sanctions all of the foreign households, no longer allowing them to trade financial assets with home. But if the foreign households can still trade international assets with rest of the world, and rest of the world is trading with home, then the effectiveness of the sanctions is going to be limited. Now, what exactly is the quantitative difference in terms of welfare levels between the two scenarios? I'm afraid we haven't computed that.
Okay, so, Angela.
Thanks, I really enjoyed it. I have a question about the exchange rate. You mentioned what the exchange rate does a couple of times. And if I remember at the beginning, the ruble fell and then it recovered and was quite strong. So should I think of that as sequencing of things, or should I think of it as the markets got it wrong and then your mechanisms came out, and if they just built your model at the beginning, they wouldn't have got it wrong?
So one thing that our model misses, and that is alluded to here again in the menu of the to be done, is the interaction between the effect of sanctions and other policy choices. Right? When sanctions were, when sanctions were imposed, a big chunk of the Central Bank of Russia's reserves were frozen and so on. Initially, the ruble tanked. But then capital controls were used aggressively. There were policy actions by the Central Bank of Russia that had a crucial impact in terms of affecting that quick rebound, determining that quick rebound of the ruble. And that's something that we're not capturing in our exercise, but that again should be part of thinking about sanctions as a policy instrument for these circumstances of times of geopolitical insecurity, war, whatever we want to call it. But we need to learn how this is going to interact with the decisions of other quote unquote traditional macroeconomic policymakers. How should the central bank of the sanctioning country and the central bank of the sanctioned one respond to this type of shocks? Now, presumably, to the extent that an objective of the central bank of the sanctioned country is preventing the currency from collapsing, the idea of imposing control and using that type of instrument is the quote unquote right idea. But for instance, what should the central bank or the home country do to deal with the domestic effects of sanctioning a big trade partner? That's a wide open question. So our exercise, more than anything, what I think Dyson and Kemal and I here wanted to do was to put out there so that there's this rush to think about sanctions using the various off-the-shelf toolkits that we have available. Now, in the international macro area, what we have seen is exercises that very much abstracted from an underlying micro-level trade foundation. And our goal was to put out there, this is a framework that can be modified, extended, and used to think about these questions, bringing things together and having a central role for extensive margin, because we do think that ultimately these sanctions are about excluding products, excluding firms, excluding agents from market participation. We think this is something important for the literature to consider.
Thank you very much. I'm afraid we run out of time, so we'll have to move to the second presenter in the session, Leo. Let me also mention quickly that Fabio will be delivering a workshop on Friday here in ASB. So all those who will be around and interested, please contact Ozer after the session. So it's a nice opportunity to make use of Fabio's time while he's here.
Okay, so thank you for having me here. My name is Ryo Makioka. Today I'm going to talk about my recent paper titled The Impact of Export Controls on International Trade. So this is a joint work with Hong Yon-zan. He's in the research institution in Japan, okay? So this is the motivation of this research. So as you may know that the trade policy has been used so much recently to address the national security concern, right? And for example, the US trade restriction against China, and also there was a US trade sanction against Russia because of the Ukrainian invasion, right? And because of that, because national security concern is a big thing, so there are many research recently. For example, the paper by Fajgelbaum et al. And also Baum 2021 also analyze the effect of these policies, right? And on the other hand, global value chain has been expanded over the last several decades, right? And for example, the 50% of world trade crosses at least 2 national borders, according to the recent World Bank report, okay? And also the semiconductor industry is not the exception, where the manufacturing process are fragmented across the world, or even including Malaysia, I think. And also, because of that expansion, there are many empirical research, not many, but empirical research on trade policy in the global value chain. There are some of that such kind of research. However, according to the recent handbook chapter by Antras and Cho, they said that we didn't have not enough research about this topic, okay? And also, this semiconductor industry are very important industry in the current world. This morning, I Googled this figure and pasted here. And this is the President Biden talking about having a wafer here in his hand and talking about the global supply chain of the semiconductor industry and talking about how they can change the supply chain. Okay, so in that sense, based on that, you can see that this semiconductor industry is a very important industry in the global value chain. And also recently, they put a ban on the semiconductor export to China. Okay, this is the last year. So you can see that this now the semiconductor industry is in the center of the trade policy, right? So based on such kind of background, the research question which I try to answer is the following. So what is the effect of non-tariff trade policy motivated by national security threat on trade in semiconductor industries? Okay. So in order to answer that question, I focus on one particular event, which is a Japan-Korea trade dispute in July 2019. Okay. And where the Japanese government strengthened their export controls against South Korea of 3 chemical materials, and that are essential in the semiconductor production. Okay, so in order to answer to this question, we utilize a DID approach and also the synthetic control method. Okay. Okay, so here is a preview of our results so far. There are 3 results. So firstly, the Japanese export of hydrogen fluoride, which is one of the 3 restricted materials, that export to South Korea declined by 87 to 91% after the policy change. Okay, and also that export to the United States increased by 92 to 94% after the policy change. Okay, so that means that probably the Japanese firms, rather than exporting to South Korea, probably they exported to the United States after the policy change. But secondly, we found that South Korea's import of that hydrogen fluoride from the US and Taiwan increased after the policy change by 87% to 140%. So combining the first result and second result, this result may suggest that the Japan did a roundabout export. They sent from Japan to South Korea through the American affiliate or something like that. Okay? And also, the South Korea's import of photoresist, this is another restricted materials from Belgium, that increased by 340%. Okay? And this is, so far, everything about the restricted material, right? And also, there was an effect on the related product. So we found that the South Korea's imports of semiconductor manufacturing equipment from Netherlands and Germany, that also declined by 54 to 72% after the policy change. Okay, so that's the second finding, and so there was some spillover effect from the material trade to the semiconductor manufacturing equipment. Okay, and our third finding is that the South Korea's export of semiconductor manufacturing equipment to China also increased by about 500%. And of course, there could be many interpretations about this result, but one potential story could be that the South Korea's production are partly relocated to China because they want to securely import the material from Japan. So I will explain that later when I talk about the result. Okay, so that's a preview of my result. So let me move on to the background of the semiconductor industry. This is a very brief background. Okay, so semiconductors are used in the many modern products, right, such as cell phone or automobile or even the weapons, right? And also its production process summarized like this figure. Okay, so basically there are 5 steps. The first step is about research and development, where firms try to increase processing capability, or they try to reduce the production cost or something like that. Okay, and the second step is called the designing, where the companies try to make the prototype of the chips. Okay, so that's the second step. And the third step is about the manufacturing. So in this step, the firms try to combine this designing and also the raw materials and also the equipment, and then make the semiconductor product. Okay, and once they complete that production, they bring that to the next step, which is assembling, testing, and packaging, and then they distribute that to the consumer or the another companies. So in that sense, if you think about this value chain of the semiconductor industry, what we are analyzing in this paper is the impact of the restriction in these raw materials on the other aspect, other place of the value chain. Okay, so that's what we are doing in this paper. And also another background information of this semiconductor industry is that this production process was historically actually vertically integrated, but now this production process is vertically fragmented, and we know that the production steps are dispersed globally. So you may know that the Taiwanese firms called the TSMC, right? That's focused on the manufacturing step, and that's one example. And also in Malaysia, there are many companies only focusing on the production, right? In that sense, yeah, that's now it's a globally dispersed in the production process. Okay. Okay, so let me move on to the background of the Japan-Korea trade dispute. Okay, so in July 2019, Japanese government strengthened the export controls against South Korea of 3 chemical materials. Okay, the first material is as you can see, first material is a hydrogen fluoride, which is used in the etching and cleaning process of the manufacturing of the chips. Okay. The second material is called photoresist, and which is also used in the printing an image of a circuit pattern onto a wafer. And the third material is called a fluorinated polyimide, and which is also used in the production step as a high temperature adhesive. Okay. And the reason why the Japanese government put this restriction is because, according to the ministry, Japanese ministry, they said this is because of the national security concern. Because they had evidence that the raw materials exported from Japan to South Korea, they are re-exported to, for example, North Korea. That's why they put this restriction. But simultaneously, there are many news media saying that this is because of the political reason, like a tension between Japan and South Korea. Okay, but because of that policy change, there was this change. So before the policy change, the Japanese firms can get a bulk export license where they can just get a license and they can use that same license for several years. But after this policy, they have to get the individual export license. So that means that every time when you export the product, you have to get a license and you have to report who is a buyer, what is the purpose, or many other things. So in that sense, because of this policy change, you can see that Japanese firms encounter a larger export cost, right? And also because they don't know whether their application is accepted or not. So in that sense, Japanese firms and also the Korean firms faced more uncertainty after the policy change. Okay, so that's a rough picture of the Japan-Korea trade dispute. But of course, if the Japanese chemical materials are not so important, it's not big deal, right? They can import from other sources, right? But actually, the Japanese chemical firms are very important suppliers of the 3 chemical materials in the world semiconductor industry. Okay, and for example, there's a Japanese firm called TOK. They supply 26% of global semiconductor photoresist, according to this information in 2022. And also, if you focus on more high quality photoresist, actually this share become even larger. Okay, and furthermore, okay.
I'm sorry, clarifying question. So I understand that South Korea and the world depends on Japan for these, but how differentiated these are? Are these very specialized inputs for the semiconductors made by South Korea, or could it be easily substituted?
As far as I know, it's very difficult to make sophisticated chemical materials. So in that sense, it's not so easy to substitute to the other sourcing, importing, firms. So that's my understanding. Okay. Okay. Furthermore, as I already, you guessed, but South Korean semiconductor industry depended heavily on the Japanese raw materials. And for example, the 2 out of the 3 raw materials are imported more than 90% from Japan. Okay. And also, semiconductor products are the very big things for South Korea. So semiconductor products comprise of about 20% of South Korea's export. Okay. So in that sense, there was some restriction in a very important industry for South Korea. So it's natural to ask what is the effect of that on the trade relationship, right? So in order to analyze that effect by excluding other contaminating factors, I ran this following the estimation equation. And left-hand side is simply this is a log of export value from product H to country K and the year month T. And on the right-hand side, KOR denote a dummy variable on export to South Korea, okay? And the next one, the hydrogen denote a dummy variable on the hydrogen fluoride, the one particular chemical materials. And others denote the dummy variables on photoresist and fluorinated polyamide, okay? Two other restricted materials. Of course, when I analyze the effect on the Korean import or export to other destination, I just simply replace these dummy variables, okay? And also, this after denote the before and the after dummy variable of the policy point, okay? And also, finally, this alpha is a series of fixed effects, okay? And as for the data, I use basically the publicly available monthly trade data in 86 digits level from January 2017 to 2022. Okay. Okay. So that's yeah. All right. Sorry. What? It's in my specification the baseline year is a 2017. Product is actually compared to many other products in this. Yeah. But of course, in my robustness checks, I focus on the same, product category. But yeah, in the main analysis, yeah. Okay. Then, it's the same normal thing, but the identification assumption, common trend assumption, that means the trends should be the same between export of product H to South Korea and the those of other products if there were no trade, not policy change. Okay. And in order to make sure that this is likely to be the case, I included a series of fixed effects. And for example, this the destination country times year month fixed effect, or the product times year month fixed effect control for example, the aggregate COVID-19 effects for each country and each product. Okay. And also, but in order to check that whether there's actually some potential violation of this assumption, I did also the pre-trend test by using the event study design. And also, actually, as you can see later, we found some pre-trend in the analysis. So in that case, I used the recent method by Rambachan and Ross paper, and which allow me to do some sensitivity analysis when parallel trend may be violated. Okay, and also that methodology allow me to get how large a post-treatment parallel trend violation should be to negate estimation, significant result, which I found in the main specification. Okay. So yeah, let me move on to the result. So this is a result on the Japanese export of raw material to South Korea. Okay, and the left top figure show the effect on the export value, and right top is a effect on the export quantity, and the left bottom is a effect on unit value. Okay, and also the blue line show the estimated coefficient for each period, each quarter in this case, and this orange line show you the coefficient on other two materials. Okay, and as you can see that, especially in the top two figures, there was a significant and discontinuous decline in the export value and the export quantity, okay, at the point of the policy change, okay? So that's the first result. But also we want to know what is the effect of the Japanese export of the same material to the other destination country. So here I show you the result on the major destination country, which is the US and China and Taiwan, okay? And as you can see that, you can see slightly, there's a pre-trend, right? Significant difference. But you can see that after the policy change, which is after the second half of the 2019, after the policy change, there is a significant increase in the export value, right? Especially to the US, right? And that magnitude was about by 92%, okay? And actually, that might be the case that Japanese firms just simply, rather than exporting to South Korea, they just export to the United States. That might be the case. But by combining with the finding in the next pages, we can see that this could be because of the a roundabout export. Okay.
This one, could you give us a sense of the markets, global market structure for these three chemicals? What does it, apart from Japan, who else produces it?
Yeah, I don't have a specific answer to that question, but I know that I answered to him. It's especially for the sophisticated materials, it's very difficult to produce. So in that sense, I guess there are not so many firms which produce this material. But yeah, I don't have a good answer to your question. But yeah, thank you. But okay. Mm-hmm. Yeah. Mm-hmm, mm-hmm. Mm-hmm, mm-hmm. Yeah, good point. But to be honest, I don't have a good answer to that question. But all I found is just a result consistent with a roundabout export. The export from Japan to US increase, and also the import from US to South Korea increase, and that might be consistent with a roundabout export. That's all I can say actually. Okay. I'm sorry, it's almost a time, so let me move on to the analysis on the effect on South Korea's import of hydrogen fluoride from other economies. Oh, sorry, this is the one I already. Let me move on to another thing. So this is the effect on the South Korea's import of two other raw materials from other economies. And here I show you the result of the import from Belgium. And as you can see that there was a discontinuous increase in the import of photoresist from Belgium, right? After the policy change, right? And actually this finding is consistent with a media report saying that Samsung started importing photoresist from a Japanese joint venture in Belgium. So in that sense, because of the restrictions, South Korean firm also tried to adjust by changing the sourcing pattern, okay? And also, so far, what I showed you was just the effect on the three chemical materials, but what about the effect on other products, okay? So this is a result on the South Korea's import of semiconductor manufacturing equipment. And I focus here on the result for the Netherlands and Germany. Again, there are some pre-trend, right? And I did some robustness check by using the recent method, but you can see that there's a very short run discontinuous sudden decline in the import of the semiconductor manufacturing equipment, right? And actually, this is also consistent with a story that, in Netherlands, there is a firm called ASML. That's a very big firm in semiconductor manufacturing equipment. And their lithography equipment is used together with Japanese photoresist products, photoresist to produce the most advanced chips, microchips. So in that sense, this pattern is consistent with the story that, because of the restriction, South Korea cannot import or became difficult to import the material. That's why they also temporarily stopped importing the equipment. Okay. Okay, this is the final result. Yeah, thank you. And this is the final result. This is the result on the South Korea's export of semiconductor manufacturing equipment. And here I show you the result on China. And as you can again see that there was an increase in the exports of semiconductor manufacturing equipment to China after the policy change, the second half of 2019, right? And of course, you may say that this could be partly because China had an industrial policy, so they try to produce the semiconductor product by themselves. That's why they import these equipment from South Korea. That's why there's some trend, before the policy change. Or you may say that this could be because of the trade war between China and the US. But my point is that this decline is very discontinuous at this point, the point of the second half of 2019. So yeah, so in that sense, my so far interpretation is that I know that South Korean firm, Samsung or other companies, they had an affiliate in China. So South Korean firms possibly reallocate some chip production to other Chinese affiliates in order to securely import these materials. That's so far my interpretation, but in order to know more about this, I need to use more micro data, but so far I didn't have access, so yeah. Sorry. But this is a robustness check, but yeah, I don't have a time, so I don't spend so much time. But actually, I could check the same pattern by even using the synthetic control method. This is using a different assumption. So in that sense, I think my result is to some extent robust, even though there are some pre-trend in the DID. Okay. So let me conclude my talk. So in this paper, I analyzed the effect of Japan strengthening export controls against South Korea on Japanese export and South Korea's export and import, right? And I found three findings. First finding is that Japan decreased export of hydrogen fluoride to South Korea, but they increased the same product export to the United States. And second finding is that South Korea increased import of raw materials from the US, Taiwan, and Belgium, but decreased the import of equipment, the semiconductor manufacturing equipment. And third finding is that the South Korea increased exports of equipment to China. And the interpretation is, I hope I already explained. So based on that findings, some policy implication could be like this. So the trade policy under the national security concern may cause some adjustment in importing or multinational firms' production pattern along the global value chain. So unilateral export control may not be effective in the current global economy. So now the Biden administration tried to restrict the export to China, but they also asked to other countries to do the same thing, right? So in that sense, this finding is consistent with that story. Okay. So thank you. That's everything. Thank you very much.
So thank you very much. Fascinating paper. I'll use my moderator's privilege to begin questions. So could you control for these free trends by looking at triple difference? If you have China's imports from other countries as well, that will control for some China specific factors which are driving increasing exports.
Mm-hmm. Yeah, triple difference.
That would that may control for these free trends.
Yeah, I already control a double interaction, the fixed effect. But you're saying a triple.
So if you have importer side as well for multiple importing country.
Mm-hmm, mm-hmm.
Anyways, we can discuss this later.
Oh yeah.
My other question is about. So you say, maybe I missed those results. You say Korea is importing more of these inputs from other countries?
Mm-hmm, mm-hmm. Okay. Yeah. Especially this result could be clear, the import from Belgium. And yeah, even it's consistent with media report.
So this is somewhat validates US policy that, so even US, as you said towards the end, that US has this, is now imposing other third countries not to export.
So yeah, in that sense, yeah, because if they do a unilateral thing, this kind of thing could happen. So yeah, in that sense, doing multilaterally might be more effective
And just one comment that I think this was also the case with Soviet Union and US, especially military technology. And there were some instances in Japanese firms and German firms exporting that. So it could be useful to look at long run implication of this by looking at some historical episodes.
Yeah, let me.
That's just a
Yeah,
comment.
thank you. Yeah.
So I'll open the floor to.
Do you have any data on domestic?
Oh, actually, in the paper there is, but the reason why I didn't put here means something. I didn't find, I did only the descriptive analysis about domestic production in Japan, also domestic production in South Korea, and I found some pattern in South Korea. Their domestic production increase, and also, Japanese affiliate in South Korea, their production or sales also increase. But that's just I plot the graph.
But it seems like you could have the most direct measure of it. And then these are all the mechanisms through which.
Yeah. So in that sense, yeah. Yeah.
It's possible based on that. Sanctions.
Yeah. So in that sense, yeah. It's at this point, all I did is just check the very summary stat in about South Korea production, but I want to check more detail about how their production changed, probably, or in the other paper. But yeah, thank you. Yeah.
So I had two small questions. The first, if you know how important was South Korea as an export market to the Japanese? So how much the government shoots itself in the foot, and then you have in all your thinking is the South Korean companies adapting, right? But it seems from your saying that it's Japanese companies too. So it's an interesting insight you have is that when countries sanction or restrict their exports, it's their own companies that might not agree and try to find ways to get to foreign markets, which is the opposite of your logic.
Yeah, I think I don't have a specific number about the Japanese firms share in South Korea, but actually in the appendix, I did some analysis about the effect on the Japanese export in the other unrelated sector. Because in South Korea, after this dispute, there was some consumer boycott. So I found out there was some negative effect, even say the consumer product. So in that sense, yeah, there was Japanese company might not be so happy. Policy, I think. Yeah. Yeah, that's a good point. No, probably it was last month, was 2 months ago, right? So I'm thinking of doing that in the near future by using lifting the sanction, right? Yeah, that's a good exercise, I think, whether production coming back to Japan or something like that. Yeah, thank you for your comment.
Yeah.
Just a quick couple of things. One was a question, and apologies if post-lunch session I missed this, but was the policy change anticipated or was it a shock? And I guess the second thing is more of a comment, but you pitch your analysis in the export controls and whether they work kind of space. But perhaps it's actually more interesting thinking of it as Korean perspective and how it fits their resilience. Because what's more interesting here isn't the story around do exports controls work, because we know they don't. It's more interesting to see how Korea, with its interesting history of geopolitical relations with China, Japan, the US, and others, how this is manifesting itself in semiconductors. So whether you pitch your arguments that way, that might be more interesting.
Okay, thank you. Yeah, for the second point, yeah, it's a good idea. Yeah, for the first point, as far as I know, this is like a shock. And suddenly, Japanese ministry announced that on July 1st in 2019, or we may do this kind of restriction. So it's a shock. I think this is a shock and no anticipation effect.
Great. So we'll move on to the last paper for this session. Eric.
Thank you.
Are you still with me? Yeah, great. So thank you so much for the invite and for hanging in here. It's truly a pleasure and a privilege to be here with you. I'm excited to share some preliminary results on ongoing work. Standard disclaimer applies. The views that I'm about to share are mine alone, and do not represent the views of the World Bank, its affiliate organizations, or the executive directors. The motivation behind this paper, it's anchored on the paralysis of the WTO appellate body. And with that paralysis, essentially, the WTO lost what it was once known as its crown jewel. And for me, this speaks to a much broader issue, which is trying to understand whether international organizations like the WTO can actually allow or constrain great powers to exploit opportunities with others. And understanding this is at the core of understanding what form of cooperation is both feasible and desirable. Now, if this cooperation is going to work, the rules behind it, they need to be impartial and immune from influence. This is a fundamental requirement for justice. So in a way, the big picture question I'm trying to address here is trying to understand to what extent is that the case. Is it international law really just? And more concretely, I'm asking whether international trade courts, in this case the WTO, is actually blind to power politics. Now, ex ante, the theoretical expectation behind this is ambiguous. We have some research that shows or suggests that actually these international judges, these international bureaucrats are shielded away from government influence. They just go to an international organization, they check the nationality at the door, and everything is fine. And on the other hand, some scholars and some papers suggest that one way or another, governments can find a way to indirectly or directly influence and sway judges and affect their behavior. So of course, there are many reasons why we have this mixed evidence. I submit to you that one of the main reasons behind that are inferential challenges. Of course, we cannot observe counterfactual rulings. With that, it's very unclear whether the existing evidence is telling us something about partiality or impartiality or any other sort of selection mechanism behind these judges into these international organizations. So with this project, I tried to contribute to this literature and hopefully filling this gap. And the way I do it is I leverage a natural experiment at the WTO, where specifically at the appellate body, judges are randomly assigned to cases, such that you go as a country to the appellate body, and in some cases you may face a co-national judge, and sometimes you may not face a co-national judge in the panel. And this idea of sharing the nationality with a judge is the treatment that I'm about to explore, and that version of affinity or co-national bias is what I show. And indeed, what I find is throughout the history of the appellate body, there's a strong and substantial national bias at the WTO. But this is mainly driven by the US. Let me share some quick intuition about the way I'm thinking about it. So we have essentially countries that are principals, and they're delegating authority to these international bodies. And in these international bodies, in international organizations, we have agents. And these agents are these judges. They're international bureaucrats who have some authority, and they're going to be making a lot of decisions that affect international policy. Now, the way I think about these judges is that they're ultimately career-oriented, and they have career incentives and concern. And the premise here is that to the extent that countries are trying to influence a little bit these judges or put some carrots and sticks, they might have an easier time doing so with their own co-national judges. And of course, and this is grounded in the domestic politics literature or domestic law literature, I'm thinking that judges can have a wide range of explicit or implicit biases. And that's what I'll try to explore. So let's talk a little bit about the case at hand. This is on the WTO dispute settlement understanding or mechanism, and specifically on the appellate body. Now, of course, it started in 1995. Now it's dead. So for the for the purpose of this presentation, let's think about the time that it actually worked. So when that happened, trade disputes started with bilateral consultations. If those were not resolved, then they would move to a panel. And when the panel issued a ruling, about 70% of the time of those rulings would get appealed at the appellate body. Now, importantly, when there's a panel or there's an appeal at the appellate body, a country can be both an appellant in some claims and an appellee in some others. So there are going to be multiple claims within an appellate body case. And also importantly, there are specific features about this appellate body. It has an standing staggered membership of 7 judges. They are not in residence, so they're part-time. They don't live in Geneva. They have 4-year terms, and they can be reappointed once. And both for the initial appointment as well as the reappointment, it works by consensus. So everybody, every single WTO member country has to agree, which is why it's been so easy for the US to essentially put a stop on the appellate body, has blocked the appointment and reappointment of judges. So we have these 7 standing member judges. This is one of the last pictures of them together when there were 7 of them. This is from 2017. And the way it works, when there's a case at the AB, out of the 7 judges, only 3 oversee each claim or each dispute. And what I argue, or I submit to you, is that the decision or which of these 3 is consequential for the outcomes of the case. It's not the same if you get Van der Bosch, Sitia, and Ramirez Hernandez versus if you get Tom Graham, which is the American in this picture, and you are the US.
Sorry, just a clarification. There is not a rule for which you cannot rule on your country. Like, it's just random, and so the American gets to. I mean, it seems like absurd.
So there is a rule. The rule is actually something that they argue proves their impartiality and independence. And it's precisely that idea that the division shall be selected on the basis of rotation, essentially principles of random selection, unpredictability, and opportunity for all to serve regardless of the nationality. So this is the IB. So there's a lottery, and that's the way the 3 judges get selected. Now, of course, this is the identification strategy of the paper. But the interesting point is that this rule, which is regardless of national origin, contrasts with the rule of the panel. So at the panel stage, you cannot have a co-national judge unless both parties agree. The interesting part here is that this idea is actually, at least by observers and supporters of the AB, an example of why or how the AB happens to be extremely independent and impartial. And this is something that's absolutely enshrined throughout. And to put, yes? Initially, the first 7, by consensus. So by all the countries they propose, so the entire selection process starts there. Yeah, no. So it's interesting. Anecdotally, the US has not reappointed some of its own judges. And there's a lot of discussion around that. But essentially everything that I've shown you is essentially conditional on that selection mechanism. Yeah, and that's important to think about and extrapolate. But indeed, to perhaps put a bit more color into this thinking, let me show you a couple of anecdotes from US AB judges. So here we have Merit Jano, who actually, you might know from Colombia. She is being very outspoken. She was a judge from 2003 until 2007, so 1 term. Very, very outspoken about this independence and impartiality. Her experience, governments have been scrupulous in maintaining the independence of the AB members. I had no contact whatsoever with the US government. And in fact, US officials would even avoid extended pleasantries at the occasional cocktail party, lest even such idle conversation generate any misimpression. So the AB is so impartial and independent that you're not going to even hang out with your connationals at a party. Now, let's contrast this anecdote with another US judge, Tom Graham, who's a pro-business lawyer and who's being very outspoken, actually, a very outspoken critic of the AB, and was one of the last standing judges. He served from 2011 until 2020. And in his farewell speech in 2020 in Georgetown, he was reflecting about suggestions for the path forward. And again, this is in the context in which the AB is already dead, essentially. And the first thing he mentions that we should think about moving forward, again, the first thing is you have to prohibit anyone other than the team from discussing the case, either in meetings or in unofficial sidebar chats, unless authorized by the deciders. In other words, no partisan participation in team discussions, no private lobbying of individual deciders by staff leadership, nor part of the team of the case. So this very much stands in contrast with what Jano was saying, and begs the question of a little bit, if that's the thing, the first thing you're going to mention about the path forward, then we start to wondering about what might be going on behind the doors. So to put this, is a test with data. Essentially, I collected data for 188 AB reports. As I said before, each report has multiple claims. So I have data of about 1,600 claims. About 21% of those claims get accepted at the AB. So the majority of them get rejected. I'll collect specific information on the claims related to what sort of article they are citing. Is it an anti-dumping, a subsidies case, and so on. And of course, these are going to be controls in the regression model. I also collect information about the number of claims within a given dispute. That's usually a proxy for the quality of the dispute, third-party presence, as well as the experience of the appellee and the appellant. I collect information of the 27 AB judges, their age, gender, education, background, experience, and so on. And of course, as well as the country, to match that with the 34 countries that have been participating in the AB process, with the European Union always counted as one country. So the unit of analysis here is a dispute claim. So to give you a sense of this data, let me show you the AB rulings when the US is an appellant. Their claims get accepted about 23%, or were accepted about 23% of the time. This is in line with the overall sample, but there's a stark difference when the US has a co-national judge in the panel versus when it does not. So, yes?
So does the appellate body, the three judges, normally rule by consensus, or do they also have voting among them?
So there's an informal rule, which is by consensus. At the beginning, La Carte Muro, which was one of the original creators of the AB, made a huge deal about it, but there are no written dissents. So actually, we don't know if there was a 2-1 decision. Implicitly, and the word on the street is that it's really by consensus, but we don't know. So we just get an outcome of the panel as a whole, of the AB. I don't know if that answers the question.
No, it does, but it's a general question whether this requirement for consensus creates a kind of dictatorship of the minority. You know, if you are going to say we're only going to decide by consensus,
yeah,
that might confer disproportionate influence on any one judge.
The weird thing is that this disproportionate influence is not being exploited by weak countries. If anything, it's being exploited by big countries. And we can go back to that. But unfortunately, there's no actual data on whether there was a 2-1 or was a consensus decision. Informally, that's what they say they do, but it's not on record. Yeah. No, I'll get back to it, but essentially, you did the job for me. Yeah. Okay. So again, if you take anything from today, take this picture. So to put a bit more rigor behind it, my baseline empirical strategy is going to look at an indicator variable and whether the AB accepts a given claim that's presented before them. That's a 1 and 0 if it gets rejected. My main variable of interest here is it's a continuous index of what I call appellant affinity, which takes a value of 1 if a judge in the panel shares the nationality with the appellant and the appellant only, -1 if a judge shares the nationality with the appellee and the appellee only, and 0 otherwise. As I said before, I add a series of controls on the specific claim or the specific dispute, as well as controls on judges' characteristics, but these are averaged at the dispute level, or at the division level. And the way I do it is I mean standardize these covariates, and I interact them with the treatment to get more easy interpretation. So overall, the first set of results, once again, emphasize this idea that throughout it, we get a very concise result showing and suggesting that indeed there's been a co-national bias at the WTO. And again, if you read these results, we're talking about a very substantial effect between 8 to 12 percentage points. It's not trivial at all. Or as I said before, these results mask a very important large heterogeneity, which I argue and I submit to you it's driven by the US. Why the US? We can spend a lot of time thinking about this. There's a large literature convincingly showing how the US leveraged its positions at IOs to achieve its policy goals. Specifically at the WTO, it's being a leader in litigation, and there's evidence to suggest that he has been able to influence the language and the meaning of the rules through informal precedent. And of course, and again, we can spend a lot of time talking about the pressure and how it has blocked the appointment and reappointment of the judges to the point that the AB is no more. And of course, the premise here is that the US might be willing and able to influence any and all judges. It might just have a better and easier time to do it with their own. So to check that, to test that, what I do is I replicate the analysis, adding an interaction effect on whether the US is the appellant in that given claim. And as we can see very robustly, the effect is entirely driven by the US. Now, of course, there are many concerns behind this. Let's discuss a couple of them. One of the potential concerns is that to what extent this is about the US when you have other power players, such as the European Union, who also have a lot of experience in litigation. I confirm that there is not a EU bias. Another concern might be this is not just about great power politics, but it's more of a north-south divide, especially in the context where there's the issue of least developing countries and China has been a contentious issue at the WTO. So perhaps this is a north versus south divide or a taste bias. To test this and rule out that this is not driving the results, I replace my affinity indicator with an indicator on whether the majority of the panel is from a developed country and interact that with whether the appellant is from a developed country. And when I do that, when I do that, whether I do that with the full sample or at the sample excluding the US cases, there's no evidence suggesting that this developing versus developed contention might be driving these results. Another concern that you might have, that might explain these results, is this is not related about the US, it's more about legal background. It could be the case perhaps that because the US has a common law background that provides them some sort of nudge or a different experience, and that means driving the result. I confirm that this is not driven by legal origins of common law versus civil law. Perhaps another more concrete concern is that this is not the US just winning because they're the US, it's because they just have an advantage given the socialization to US education and the way that that US has an imprint on international law. 13 out of the 27 non-US judges were educated in the US. So to rule this out, which honestly at face value you can rule it out because countries can outsource and hire US counsel at the WTO. So you can get that socialization to the US. China was doing that for a long time, but to more rigorously rule this out, essentially I replaced the affinity indicator on whether the majority of the AB panel was educated in the US. And I repeat the analysis and I find no result. And once again, I can redo this analysis excluding the US judges to see if there's a bite on those non-US judges who were educated in the US, and there is no evidence. Now, so far, I haven't shown you anything on whether the US is actually trying to explicitly exert influence. This is very difficult. So here I'm just trying to find, is there anything that we can do in the spirit of completeness and transparency? And we can draw a lot of insights from the political economy of foreign aid literature, where we can think is to the extent that the US is willing and able to use foreign aid as a tool to achieve foreign policy goals, as the literature would suggest, then we may have a corollary where the US might increase US aid to those countries when they have presence in the appellate body. And given what I showed you before, we can think of the European Union as a placebo test for this. So what I do, and of course this is not causally identified at all, but I look at whether there's bilateral aid to a given country from the US and from the European Union, and regress that on an indicator on whether a given country has presence in the AB. I include a series of standard, well-known controls, covariate controls, as well as unit and time fixed effects. And there's robust evidence of this correlation that we see that US aid increases to developing countries when they have presence in the AB. Not the case with the European Union aid. And this is robust to, for instance, removing Egypt, which is a sensitive case for US aid, and also has had 2 judges in the appellate body. And also, we can do some matching and get more precision estimates. And the results, this correlation, these suggestive results hold. I'm happy to discuss about robustness and extensions. Perhaps the one to emphasize is that I can operationalize this affinity in a much more flexible way, and the findings hold. I confirm that these are not driven by specific types of claims. The anti-dumping have been known to be very contentious, that those are not driving the results. And there's some suggestive evidence, I would argue, to the point that is anecdotal, about some term limits behaviors as well as behavior towards China. But again, the sample size are very, very small, so I don't want to make a big fuss about it. Thank you. So, I mean, going back to it, it's very hard to sign the bias. So indeed, as Amit said before, it's really not, at least at this point in time, it's hard for me to say whether this is the US getting a favorable treatment, or in fact, being a favorable treatment by US judges, or the US being discriminated against by non-US judges. And this is important to think about, because ultimately, I think we have an important puzzle. Arguably, the US was winning, quite a bit, but broke the system. So perhaps this is a question, and this goes back to Aditya's points, like, okay, who's really trying to control the system to perhaps really maximize what they're getting out of it? So we can get some lessons, at least some discussion points for the next MC meeting in Abu Dhabi in February. First one is we have to reevaluate the co-national judges. Alessandro, just go back to the point. I mean, right now we have a divergence between the rule for co-nationals at the panel stage and the AB stage, or at least the second tier stage, whatever form that's going to take. In the current MPIA, there are no restrictions to my knowledge on co-national judges. I think it's interesting, at least theoretically, to talk about the randomization of term limits, possibly longer tenures. The longer tenures has been a proposal by many for quite some time, and also to consider having the judges in residence in Geneva. And of course, going back to your point, Aitia, we really have to move away from concession selection. It's going to be challenging. I don't know if it's feasible, but it's certainly desirable. So in terms of main takeaways, at least throughout the life of the AB, there was a substantial and strong national bias. And this seems to be driven by the US. It's not explained by economic status. It's not explained by socialization to US law or education or legal origins, and seemingly also affected broader US foreign policy, such as the provision of foreign aid. From a research point of view, I think it emphasizes the importance of looking at bureaucrats in international politics and international cooperation. This is a burgeoning area of research. More substantively, I think it really challenges the impartiality and independence of international organizations and international trade law, even in what it was once known as one of the best examples of international legalization. And perhaps, and I'll go back to this big picture question, this type of bias might be the price that we have to pay, the price of entry to get the big guys to cooperate and sit at the table and provide legitimacy for these organizations. Unfortunately, at least history in the AB up until this point shows that this price was not enough. Thank you so much. Looking forward to your questions.
Your last point, I think, is a very nice point because, before the appellate body, countries had a veto. They could completely stop a dispute. You needed a consensus which involved the losing country also to accept the panel report.
Exactly.
So, it's like some types of religious law. If you look at what the situation was before, you now moved in principle to a more objective standard. But you needed exactly to accommodate this paradox of a large and powerful country willing to tie its hands where, Costa Rica could sue it for losing an underwear dispute. I think the very nice point you're making is that maybe you had to accept that as this hegemonic transition happened, you needed to give more say de facto to the incumbent hegemon. And so one way of, but the fact that you needed the presence of an American judge on that, rather than, it could have happened even without American judges, because towards the end, the WTO had a choice. You rule against the US, there was a period, and the US will walk out and destroy the whole system. So do you make softer decisions to keep the system alive? But the fact that you're finding that you needed the physical presence of the US judge suggests that maybe there is more direction.
Thank you for that.
Actually, Eric, very, very interesting. To circle back on the anecdotal evidence, it would be also interesting to do it by separate sub-periods. I'm not saying by American judges' tenure, but that would be very. You see your analysis. You could do like to see whether over time things changed. I don't know, something like that.
I think there's a pre and post Jennifer Hillman. So Jennifer Hillman was the judge after Jano and before Graham.
Yeah.
She was not renewed by the US and allegedly was because of her voting on AD cases. I tried to do the pre and post Hillman. I don't have enough power.
Okay.
But
fair enough.
Certainly I thought about this. I mean, there's if we can we get the where is it? The US judges by term? And again, I don't have power, but it seems that when they're up for potential reelection or reappointment, they seem to be aligned a bit more with the US. Again, I don't want to read too much into it, but in the spirit of anecdotes, we have that.
Okay, so we'll end this session. Thank you very much.
Thank you so much.
Had a controversial note. So we're now going to switch gears for the conference. Now we are breaking for a coffee break, and after that we'll basically reconvene at 4 for the special address by Malaysia's Minister for Industry, Trade and Investment. And after his address at 4:30, we'll have an hour-long policy panel session with Daria Taglioni, who's with us from World Bank headquarters, Dato Seri Wong, who is Malaysia Semiconductor Industry Association President, Dato Seri Sam Ishaq, who is the Trade Ministry's Secretary General, and Dr. Ong Kyang Ming, who is affiliated with Taylor's University. And then Aditya himself will be moderating this. He has been volunteered to moderate the session. So thank you. We'll end the academic part of the conference, but I'm looking forward to seeing all of you back at 4 after the coffee break. Thank you. Also, please don't forget to fill in the survey, which can be found through the QR code on your desks. Okay, thank you very much.
Yeah.
Testing 1, 2, 3. Testing, testing. Testing 1, 2, 3. Testing
Check,
1, 2, 3.
check,
Testing,
just,
testing.
Test, test,
just.
test.
Okay. Have to company
Test, test, test.
just
Test.
two.
No problem. Testing. Testing, testing, testing. 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 Testing, testing.
Test. Test, test, test. Test, test, test.
Testing. Testing, testing. Testing, testing. Then we don't. Testing. Testing, testing, testing.
CI test, huh? Testing, testing. 1, 2. Testing. Testing. Testing, testing. 1, 2.
Here, testing. Everyone should have one. Might be very soft. One have to, let's see. Let's see. Then this one is okay. Testing, testing. Testing, testing, testing. Testing, testing.
Check test 1 2 test.
Testing.
Test 1 2 test.
Yes, this one is loud. Yeah.
Test. Check
Two shares
test.
themselves. Is it okay? One moderator.
Once, because there'll be four.
Oh,
Actually, five, actually. Daria will also join.
I see. Okay. Maybe she can use the one. She's the
The
moderator.
Yeah. The moderator should use the clip.
Yes.
Right? So Aditya will use the Aditya will use the clip. And then we've got three more. But this one mic, okay, right? So we have only three mics, right?
Yes. Yeah,
Or two lapel, one mic.
So it's
The other one,
handheld.
sure, yeah.
Maybe two handheld mic. Moderator will use one, while remaining five. Four and share.
One.
This one have to share lah then.
I think he's getting the other one.
Oh,
Check
there's
test.
another one.
Yeah,
That
so
should be
two
fine.
lah. Two should be okay.
Okay lah.
Okay. Testing. 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 Testing.
What number? 2.
Testing. Testing. Testing.
No. Don't have to share lah.
Two lah.
Two.
Two.
One.
Yes.
One.
Yes.
So they have to share among three because the other two is clip on. I mean,
Yeah, the lapel lah.
yeah.
So we arrange the chair right after the data call, is it? Okay, then we show everything.
Yeah. So while when Daria speaks, it's already.
Almost there.
Before Daria lah.
Before the other, right? But there's no break in between. Right? Once we finish with them, we have to really come. And
The Daria line.
Sorry. You get the slide up first and then.
Yeah.
All right, then.
Oh, yeah.
Good. What have we done? Exactly. Yesterday you are the MC, today you are the MC, right? Oh, Tickens, goodness. To be fair, everything share, right? You know, let one person do all. Later you're happy to move the chair as a.
Yeah. If there's,
Easy lah. Just.
two on that side, three on this side, right?
Yes. To be a curve.
Chair is gonna be in the middle.
I know, it's a 3 here, 2 there.
Three
Behind the curve lah.
side the podium.
Make to hit, right? It's
Push on me. Testing 1 2 3. Testing 1 2 3. Okay, yay! Thank you, Sasi. Testing. Testing, 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 testing. Should be okay. This one.
Testing. Welcome back, everyone. Please be seated. Welcome back, everyone. Please be seated. We will begin now. Ladies and gentlemen, announcing the arrival of our guest of honor today, Yang Berhormat Senator Tengku Datuk Seri Utama Zafrul Aziz, the Minister of Investment, Trade and Industry. We are honored to have you in our presence today. I'd like to invite Dr. Apurva to introduce.
Thank you, Adam. So a very late good afternoon, ladies and gentlemen. It's my great pleasure to introduce our speaker today, Tengku Zafrul, Malaysia's Minister of Investment, Trade and Industry, who has kindly found time from his super busy schedule and agreed to give the special address at this conference. Now, as the latest World Bank's Global Economic Prospects shows, reviving investment and industry against a backdrop of slowing trade is a challenge anywhere and everywhere. And it would need a rock star to deal with these challenges. So fortunately, Tengku Zafrul is exactly that. And I mean it literally, because he's a talented and self-taught guitarist with a particular interest in rock and blues music, and he rocks with various bands and musicians, including fellow ministers from neighboring countries. Not only that, he has a strong interest in running and has completed several marathons, such as the New York City Marathon and the Tokyo Marathon. And he reminds me of what I heard once. Tough runs don't last, but tough runners do. So, but not content with musical talent and running skills, Tengku Zafrul has had an illustrious career before joining government as a private banker and more recently as a former finance minister of Malaysia, where he led Malaysia during the trying pandemic times. So it is therefore no surprise then that Tengku Zafrul is now the person to drive Malaysia's trade, investment and industry to new heights. And I had the pleasure of seeing him in action recently at the Meaty Retreat in Genting. And now you will have too. And believe me, you're in for a treat. So please join me and put your hands together for a warm welcome for Tengku Zafrul. So.
Thank you, Dr. Apurva. We have with us today also the Secretary General of MITI, Dr. Sri Isham Ishak. You will be hearing from him later. He's one of the panelists after this session. So after I speak, please stay on for him. That was the joke. Anyways, everyone's very serious here. Anyway, also thank you, everyone. Oh, got Fabio oncoming as well. Just on the way here, I was messaging him on something very serious, which I hope he takes it seriously as well. And of course, we have just now Mr. Mr. Yashiko Matsuda, World Bank Country Manager, and of course, everyone here, distinguished speakers, panelists, understand members of the media as well, ladies and gentlemen. So Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to all of you. So first and foremost, thank you to the World Bank and the Asia School of Business for having me to deliver this special address on a conference theme, trade and global value chains in times of insecurity. But before I start, I'd like to just again thank the team from MITI who have been working tirelessly the last couple of months on the challenges that we are facing today. And I personally believe that the forums like these are important, not just for researchers, but also for policymakers, global entities, officials as well, and the private sector to share insights, research findings, and information on identifying key issues that affect current trade flows, and of course, what are the solutions that we can work together to overcome these challenges. There is a strong imperative to overcome these challenges because if you look at this, what are the dividends? So the dividends that we can reap from greater global trade openness, global trade support, multilateral supply chain, and of course, prosperity and global peace, right? However, as we are all aware, we've been talking about this a lot in the government, talking about the trade sanctions are the flip side at the very same coin. Hence, decisions to deploy trade sanctions to prevent or halt any form of bilateral or multilateral conflict must be made very, very carefully. More often than not, it is that innocent people that will bear the burden, the real burden of any trade sanctions. So oftentimes we have to remind ourselves that the primary reason we trade is to enhance prosperity. I mean, that's the basis of trade, and we've seen a result of that. And we must never lose sight of this goal. So, distinguished guests, ladies and gentlemen, a few months ago, I was invited to attend the World Economic Forum. I think a few of you were there as well. This was in Davos, where I was invited to speak on several panels, including panels such as supply chain and transport, the global risks of economic fragmentation, and also living with risks. So these are some of the discussion groups that we were part of. And I also participated in various conferences in Singapore and in Hong Kong recently, where I've been invited to speak, and it carries similar themes. Yeah, one thing that is clear when I attended all these conferences as a panelist and as a speaker, while the world is still recovering from the impact of COVID-19, countries, governments, businesses, and of course, us as individuals are already facing a multitude of fresh risks that continue to threaten as well as undermine the decades of human progress and development. So, you know, in the world of, as what Doctor said just now, from my background, I'm from the world of finance as well as investments, where I came from. Every time we revise our key risk metrics, we will ask ourselves whether a situation calls for a risk on or a risk off approach. So if you look at what's happening today, in our current world, there's always a constant risk on mode since the start of the pandemic in 2020. Although the COVID pandemic has been brought under control, this is our fourth year facing a poly crisis, which is fast becoming, some of my friends calling it a perma crisis, which is, of course, a permanent crisis situation. For the short term, we have identified that key global risks include the slowdown in China's medium-term economic growth, if you compare to what it was before. Global inflation, of course, the continuing Russia-Ukraine conflict, escalation of the U.S. trade, U.S.-China trade war, as well as, some may say increased geopolitical tensions in East Asia, right? So all this have led to major risks such as increasing interest rates. We have seen the currency exchange volatility, supply chain disruption, of course, is one of the topic today, and rising prices of energy and raw materials. So longer term risks includes increased level of debts, a new era of low growth, and that's what we're seeing today as well, a low global investment, and we hope not to see this, but there are talks about regression in human development after decades of progress, and of course, growing pressure of climate change as well. So while technology, I think everybody here will agree, is a clear solution to many of these risks, rapid and unconstrained development of technologies could also be a risk. I mean, we talk about AI, etc., etc. But, particularly when it's misused for sometimes civilian or military purposes. So, ladies and gentlemen, I'm sure many of you had touched upon this risk in the discourse. I understand this started yesterday. And I would like to deep dive into a few of these risks, but from an industry supply chain resiliency perspective. This is because in a supply constrained world, certain risks and challenges actually they compound one another. So for example, climate change that brings about more frequent extreme weather patterns are threatening lives and disrupting the supply of food supply, but with many countries facing scarce fiscal resources, which issue must the policymaker tackle first, right? So for the first time in many decades, businesses as well as industries are operating in an environment marked by scarcity and competition of supply. In fact, the global economy is already changing to reflect our move into a supply-constrained world, because if you look at the value chain resilience, it has emerged as a key issue in most C-suite executives' agenda. In fact, many of the meetings that I have recently with relevant industry, this is one of their main concern. So when we meet manufacturers, for example, apart from facing double-digit inflation, labor shortages, energy scarcity, along with new regulations as well that focus on reducing waste and emissions. So all this headwind impose fresh operational constraint, and actually it covers as well hidden vulnerabilities, therefore fundamentally changing the balance of supply and demand in the process. So there is a recent, in the World Economic Forum, a report called Global Value Chain Barometer. This was issued in December last year, has also indicated a 146% increase in climate-related risks, events, and a 110% increase in disruptions driven by geopolitical tensions versus what has happened a year ago in December 2021. So all this have increasingly caused various global value chain failures. In fact, many global companies, including companies here, based here, have started to rewire their manufacturing processes. I think you know this very well, in response to the new supply constraint paradigm. And this, of course, in turn, also collectively will reset the global value chains. The faster all of us here can accept that fact, the faster key solutions can be found. And because Malaysia is firmly embedded in the value chain, especially in the global value chains, the next thing I would like to share is our strategy, the MITI strategy, on rewiring and transforming Malaysia's industry, to take stock of this new global economic mega cycle that will be characterized by value chain disruptions, resource competition, and climate change. So, ladies and gentlemen, since I joined MITI, I've always emphasized to my colleagues that in realizing Malaysia's true potential as an industrial powerhouse, a strong trading nation, and a preferred investment destination, what we need to focus on are our fundamentals in enabling investment, industrial, as well as trade environment, right? So given the challenges and evolving global economic landscape, we have actually tweaked the ministry's name as well. The acronym remains the same, MITI. So instead of Ministry of International Trade and Investment, it's now Ministry of Investment, Trade and Industries. So we are showing that we are fully focused on attracting investments and, of course, reinvestments, right, and boosting trade and future-proofing our industries. So in terms of our long-term strategy, so MITI launched the new investment aspiration, the NIA, as well as the new investment policy, NIP, this was done late last year. And before I provide further information on our strategies, I want to briefly talk about the key challenges in the global value chain dynamics. So one key change that the report mentioned is that companies, when it comes to their strategies, the company's strategies, will no longer center on achieving economies of scale through outsourcing to the cheapest producers at all costs, but by replacing resiliency with profitability and sustainability to ensure service quality and long-term business continuity, right? So in short, companies are going from global to globally connected multi-local value chain. So as companies, they move away from the concept of low cost at all costs and towards securing supply of critical resources, especially including skilled labor, more and more reshoring, nearshoring, or friendshoring of production capacity and supply base will occur, right? On this, for us in Malaysia, the government, MITI especially, is looking to capture short to mid-term opportunities from suppliers wishing to secure or diversify their supply chains. So we simply, of course, have to be opportunistic as well. Malaysia may not have the sizable may not have a sizable customer base for MNCs, right? But what we do have are all the right enablers, such as the rule of law, policies, talent, and natural resources. So that all these factors make it conducive for investors to use Malaysia as their gateway for the Southeast Asian market and hopefully also for the Asian markets. So directly related to this, one key industry in which we have an advantage is on semiconductors. Yeah, I think Dr. Sri here will agree with me. In fact, Tesla's recent decision to open an office in Malaysia was predicated on Malaysia's semiconductor industry's more than half a century track record, 50 years of track record, and well-known capabilities in serving the global chip supply and value chain. So if you look at it, indeed, being a critical part of the supply chain in itself goes a long way in attracting international business to invest here. But we must, of course, never rest, can't be complacent, and we must continue to move up the value chain. Next, we know more and more companies will move from regulatory compliance, they will move to innovative sustainability. On this score, our ministry is proactively de-risking our economy by crafting the national ESG, or they call IESG, National Environment, Social and Governance Industry Framework for the manufacturing sector. So through the IESG, hopefully the Secretary General will agree with me, it will be coming out by end of 2023, right? We will guide industries, especially the SMEs as well, on embracing ESG in their operations. So the faster we do this, the faster we can leverage on global companies who are now redesigning their value chain along sustainability aspects as well. So we must prepare our industries for now to ensure resilience of our industries in the global supply chain. We also note that more companies will move from economies of scale to skills, to economies of skills, right? From economies of scales to economies of skills. For example, by producing smaller, localized batch sizes and then duplicating their manufacturing networks and supply base. So the key resource here is actually skilled talent, skilled talent base that is agile as well as open to continuous learning and open to any location posting globally. So basically someone that is very mobile. On this call, I'm pleased to share that Malaysia is enhancing our public and private partnerships for technical vocational education, TVET, and MITI, on the other hand, is working on relaxing the red tape for high quality workers, high quality professionals, to ensure investments are supported by the right skilled talent. So through our agency, the MPC, this is the Malaysian Productivity Corporation, we also have the Academy in Factory program, where trainees receive on-skill training or continuous learning at factories themselves. Right. So further, I think companies will also, we believe, will move from doing digital to being digital, right? From doing digital to being digital. So deploying technologies such as robotics, AI, of course, 3D printing, quantum computing, and the likes across end-to-end operations to enhance efficiency and productivity, right? So this again requires skilled labor, of which Malaysia has ample supply through thousands of its qualified, hopefully English-speaking graduates as well every year. So, ladies and gentlemen, I mentioned about NIP just now, the investment policy. It does, what does it do? It provides a broad framework where Malaysia is where we are heading as a country from a global value chain perspective. And what I am most excited about is actually our reform strategy to build industry resilience and move our industries up the global chain, the global value chain for the longer term. So we are doing this through our new industrial master plan 2030, our NIMP 2030. So this NIMP 2030, which is also meant to build Malaysia's industry forward national policy or Industry 4.0, is extremely crucial in preparing and building the resilience of Malaysia's industries for the longer term or for the long term. We want to drive industrial transformation by, among other things, we want to create a competitive industry with high complexity. right? We want to build a high income and skilled workforce. We want to establish strong domestic linkages, expand all the clusters that we have today while growing new clusters and improving inclusivity. So in other words, MITI is working on improving our industrial ecosystem from within its core, right? And from the inside out, while ensuring that we remain inclusive, get people's inclusive participation in a sustainable industrial development. So the IMP 2030 is also how we will move our industries up the global value chain, as I said just now, by building their resiliency and capacity for change and for ESG-related demands. So take, for example, the sale of a computer, maybe a HP laptop at the New York store. In terms of functionality, the four main categories of semiconductors in a laptop are memory chips, right? Microprocessors, standard chips, and complex systems on a chip, SoCs, right? These components will be made by different firms in different locations, such as the US, Taiwan, South Korea, Japan, or China. When it comes to semiconductor production, the main stages are design, manufacturing, and assembling, which includes outsourced semiconductor assembly and test, or in short form, OSAT. So each of these hubs combines R&D and design, in which high-wage economies with manufacturing, testing, and assembling from low-wage economies. So from that example, it is obvious which parts of the value chain is the most lucrative. In transforming our industries, hopefully via the NIMP 2030, we target to move Malaysia's semiconductor industries further up the global value chain by improving various components and enablers that will support that move. So most importantly, all these efforts must create new and higher paying job opportunities for the local workforce and opportunities for localization of other services by SMEs. We've always talked about being trapped in the middle income group. But in the meantime, we will continue, of course, to target FDIs into strategic economic sectors in Malaysia. What I mean by strategic economic sectors are economic sectors that are impactful for our future economic complexity and for our future economic growth. These are, of course, identified in our NIA as E&E, which includes medical devices, pharmaceutical, digital economy, aerospace, and chemicals. Right? So we are focused on attracting quality investments and driving industrial transformation that could create positive spillover effect to the wider economy in terms of, as you know, providing high and growing wages, uplifting SMEs, and then creating the target outcomes on the ESG front. Talk about new government focus on Madani government. We talk about social equity as well as governance. Right. So, ladies and gentlemen, given the short time frame I'm given today, I hope that I've given you sufficient insights into MITI's policy planning to support your research on decision making. If you have any further questions, my Secretary General here at the panel later, you can grill him. But before I end, I would like to emphasize that the Malaysian government is committed to supporting the growth of industries and trade by working closely with all stakeholders to create a conducive environment for investment and sustainable growth. And further, as we all of us at MITI would like to say that today Malaysia is in a much better position policy-wise to prove ourselves, right, or promote ourselves as a pro-trade, pro-business, as well as pro-investments. So no matter what the challenges are, we are ready to stand. We are ready here to stand together to ensure we achieve the targets of Malaysia's industrial transformation in making Malaysia a prime, cost-efficient launchpad or support base for countries seeking to enter ASEAN or even Asia. So thank you very much.
So thank you, Minister Zafrul. That was an excellent overview. Of course, being the World Bank, I've heard you many times before, but it's always just refreshing and it's always something insightful from when you speak. And just we are very happy to have partnered with MITI in the past on the National Economic, the NIA and the NIP, and now the Industrial Master Plan. So very much we appreciate your support in involving us. And so would you be up for taking a few questions or, yeah? Okay, so before the policy panel comes in, any questions? We have this unique opportunity of having Minister Zafrul here. I see Aditya smiling and looking around. Aditya, do you want to take the first crack? Just raise your hand and yeah, Yasuhiko.
Ivy, thank you very much for your overarching speech. And the conference is focusing on a variety of aspects of external impact on sort of domestic economic activities through trade and the global value chain and so on. And Malaysia, has, like all the countries in the world, just went through a major shock, which was the pandemic. And that I think a lot of the adjustments had to be made. You were Minister of Finance, for much of that period. So what lessons did Malaysia draw from that experience going forward? You said it's risk on constantly. So unanticipated, shocks are coming, right? And then you're having to be nimble in policy making. So what are the lessons there?
Thank you, Mr. Mazuda. Well, I think the word nimble there is the key answer to that. I mean, being agile and nimble, because what had happened during the crisis when we were facing it was at the height of it was the year 2020. And when we look around us, there was no playbook. Everyone was basically getting hit at the same time for the first time, right? So you can't say that, hey, can I cut and paste the solution when there are no solutions yet? And again, everyone also facing a unique challenge in a unique way, given the different so-called impact to the society that we are in, right? For Malaysia, obviously, there was an Oxford report that says that Malaysia imposes the most stringent COVID SOP after China, right? There was when we were meeting like 2-3 times a week, talking about SOPs, talking about especially MITI of course was very involved in what's going to happen to which factory is going to close, which factory is going to open. But even before then, right, when we had to complete shutdown, it was never done in any other country apart from China, where no one can move, right? So to answer your question, there are 3 things that we learned from that. One is obviously you can never be prepared for anything, right? And therefore, it's always good to ensure that we have a team that is ready to be, in a way, agile and dynamic to work together as one, right? So that's the first one, because it involves various agencies, various ministries, and in the end, it's actually all stakeholders, the NGOs, the private sectors, and of course, every individual here. So it means that we needed a whole of nation approach to resolving something, which usually people will just look at the government or the relevant policymaker to resolve. But for this crisis, it taught us that we need to all work as one, right? Secondly, I think it's also important to note that when this crisis occurred, we need to have a strong, well, not strong, but adequate in a way, reserves to come up with the various packages, not just monetary, but also non-monetary. The infrastructure, the healthcare infrastructure, the hospitals, everything, right? If we were not as well, if you look at other countries, there are some who are obviously more prepared or have better resources than us. But where we were, in the scheme of things, we had enough fiscal space to support many of the industry. If you look at the amount of support given, both fiscal and non-fiscal, it's close to 880 billion ringgit, right? It's huge, but again, it was because we had we increased our debt to GDP, I think, if I'm not mistaken, we had a ceiling of 55%, and then we went up to all the way to 65%. And YB Ong Kiam Meng was part of the MPs that approved it, right? We had the, what do you call it, the COVID Act, which allow us to spend it. And we also had kumpulan wang amanah negara for our vaccine. So basically, Malaysia was quite lucky, fortunate, that we have resources to help mitigate. Of course, we cannot give all the support that we want to, but it helped mitigated somewhat the impact to our rakyat. And third and final is, I think, what's very important is the mindset. Working together, having resources, and the third one, as government, as policymaker, the one that question you're asking, we need to have a very open, so-called thinking, thinking out of the box on solutions. Because if you look at what we did, and many other countries did, it's things that in normal circumstances, we will not have had done it, right? But this is not a normal, it's not BAU. So similarly, I think by adopting the same mindset today is important. And I hope, basically everything that we're doing today actually is as a result of what has happened during the crisis. It's the new normal, right? Simple example being how people go to work, right? I think many of my ex-colleagues in the bank are still working from home, working Monday to Wednesdays or working Thursday to Friday, and I think many professional groups are also doing the same. So the same here as well, right? So these are the third thing that you got to learn how to adapt and change into the new way of doing things. So, but again, those are the three things that if you want me to summarize, the learnings that we, me personally as well, after what we went through during the pandemic, COVID-19. Thank you.
Any other questions? Minister's time is scarce, so.
Yeah, I got 2 more minutes.
Okay.
2 more minutes, so maybe.
Okay, a lightning question just before you go. You very nicely described the innovation that is being encouraged to revive Malaysia's manufacturing sector. But we've seen that the share of manufacturing and value added in employment has steadily declined over the last decade. And it's the services sector where a lot of people are going, and also to not necessarily the most dynamic or productive parts of the services sector. So, if I can take you away from the tangible to the intangible, what are the reforms and actions that you're contemplating to make the services sector more productive and to harness this digital revolution that is transforming services?
Yeah. Well, first of all, we need to acknowledge where we are today, why we are where we are today. And we had that robust and frank discussion, in fact, 2 weeks ago. I think YB, Dr. Ong Kiam Meng was also there, but where we are, why we are where we are today, right? And one of the reasons is about, we talked about productivity, about how, if we look at productivity, the gap between us and our neighboring countries is narrowing. And when you talk about productivity growth, we were one of the lowest in terms of productivity growth compared to our peers or even our neighbors. And why is this so, right? And of course, one reason that was given is because the dependency on cheap labor, the low investments in automation and investment in 4IR related technologies to improve productivity, etc., right? Basically, there's a substitute to investment, which is low cost labor. And we've seen that in the last 10 years, right? Some are even accusing, I'm not accusing, but saying that we are de-industrializing, right? Those are from the, but you were talking about the service sector, right? The service sector as well is in one of the key five, especially when you look at the digital economy. Today, someone asked me about where are we on AI, right? I mean, everyone's talking about artificial intelligence. We are talking about the usage of, by the way, my notes just now was not done by ChatGPT. That's what I think anyway. my team could have used it. But what I'm saying is, the kind of service, the service sector as well. That's why when I talk about digital economy today, we're focusing a lot on getting the infrastructure ready, right? I mean, of course, we want to be the data center hub. We want to make sure that 5G is rolled out quickly. Today, also the government said by end of this year, 85% of the population will get 5G, especially enterprises, etc., etc. So I think basically those are the enablers that will increase the productivity of the services sector, right? So this and today, with the convergence of industries, right? Even if you look at what is services, what is manufacturing, it's already converging, right? Companies, cars, mobiles, people are saying cars are now actually moving phones, right? And et cetera, et cetera. So again, the thinking has to change, right? That's why I always challenge my team to change, but then everyone's still in the box, right? They will always have an excuse not to change. For various reasons, because and I've gone through this, many transformation in many companies. The change management is important, but you need alignment for that. So similarly in government, I think, of course, it's bigger and it's more challenging. But I think one important aspect to get that productivity up in services or manufacturing is policymakers have to have the political will, knowing what the challenges are to make that right policy decision, and at the same time making that belief or trust that what they're doing is right. And in such a case, it's not that easy to do. So that's my answer, practical answer. Thank you, and thank you very much.
Okay, thank you. Thank you. I'll just be back. Okay. 2 minutes.
We now turn to the policy panel discussion in 2 minutes. Okay. We now turn to the policy panel discussion on Malaysia's participation and progression in global value chains amid the recent global developments. For our panels, we have Datuk Sri Wong Siu Hai, President of Malaysia's Semiconductor Industry Association. Anywhere. We have Yang Berbahagia, Datuk Sri Shamisa, Secretary General of MITI. We have Professor Dr. Ong Kian Ming, Professor from Taylor's University. Mr. Aditya Mato, Chief Economist for the East Asia Pacific region at the World Bank, will be the moderator for this panel discussion. And Daria Taglioni, Research Manager with the World Bank, will deliver the introductory presentation. 7 minutes will be allocated for Daria's introductory presentation, followed by a short 7-minute comment by each panelist. The remaining time would be an open discussion among the panelists, moderated by Mr. Aditya Mato, and open Q&A session. Without further ado, I would like to introduce Ms. Daria to deliver her introductory presentation. A round of applause, please.
Thank you very much. So what I'll do in these few minutes is just to find some of the messages that came out of these 2 days and add a couple of points that perhaps will introduce a bit the discussion. So what have we learned from the recent global developments in trade and trade policy? I think we can take 3 different views. So if we take a policy view, what we saw is that there are contrasting trends in trade policy and international cooperation. We talked a lot about decoupling, deglobalization, but in fact, we see also elements for further cooperation. Then we can take a macro view. And what we discussed today, it's different forms of separation. But there can be different stages of separation, different forms of separations, and these are very distinct effects on the offenders, on the targets, and on bystanders. I will say something more later on that. And finally, the micro view, we had quite a few papers that reminded us of how firms are at the core of what we are trying to describe, and not only firms, but firm-to-firm network that are increasingly dense. And so the point here, we saw it from different angles, is that deglobalizing is very hard to achieve precisely because these networks are very complex to capture, and sometimes the policy measures are very imperfect and rough forms of trying to shape them. But also when it happens, it's very costly. So let me just get quickly to these 3 points. The first one on contradictory policies. So as I said, it's true that we saw a lot of harmful measures, which is the top line here, with an incredible acceleration since the COVID, but so the number of policies that are friendly, that open more trade, increased over the same time. And also those had an acceleration in recent years. To be noted that a lot of these policies take the form of subsidies. So there is a lot of industrial policy in this new era. The second point is that where is this industrial policy concentrated? One area is policies for climate change. Other areas are for jobs, for security. But so if we look at policies for climate change, we can track what's happening in this acceleration, and we can ask ourselves if they target trade intentionally or if trade is a bystander. And so the picture is that while over a long period of time, and still now for the majority of the policies, trade is really a bystander, in recent years, we see more of an intention to target trade with in the motivation of these new policies. Here in the chart, I'm showing what's happening in the G20 countries. We see that increasingly in the motivation of these policies, there is a direct intent to affect the competitiveness of the country. So climate change and policies for climate change are used also to shape the competitiveness of the countries. And increasingly, and that's are the green bars, there is a concern of leakage. So in a context that becomes more conflictual. And that's probably a point that I would like to get back in the debate. And a lot of these policies do not take the form of measures that change the relative price of goods, but again of subsidies, as we see more in general. So I was saying that at the same time, while we see a lot of policies that have intentionally or unintentionally this distortive effect, we also see a lot of dynamism. So many more deep trade agreements kept to be signed. The services economy has liberalized since the global crisis, and these charts show this. And so the picture is really mixed. Now, coming to the second point, there are different stages of separation. So we saw Brexit, which Aditya defined as a marriage breakdown that goes into a friendly relationship. Being a European, I would say it's not that friendly, but it's true that it gives different opportunities and challenges when there was a very deep trade agreement before, and the ex-post relationship is still very deep. And of course, the relationship, the depth of the relationship within the couple, it's important, but it's also important the depth of the relationship of the separating couple with others. We then had the US-China war, which is the move from a non-discriminatory to a discriminatory relationship. And again, we saw yesterday that it can deliver unexpected results. And importantly, for the bystanders, the shape of the demand and the supply of the country, the ability of the bystander economy to reallocate resources, it's important. And then, of course, we heard today and yesterday about sanctions, which is an attempt at collective punishment. And so there we have issues of effectiveness versus collateral damage and roundabout trade, as we heard today. So these are all very different issues which we need to learn to start separating. The third point is that we heard about Malaysia's plan to make a dent in the digital economy. And the digital economy is really interesting because it's a very complex industry. It's not anymore the global value chains where there is a lead firm and suppliers that do exactly what the lead firm do. All these boxes are different industries that interact in very complex way with one another. I call it a massive modularity, but it's a highly decentralized system where there is not an obvious leader and where the relationships are very strategic. So when you try to influence this system, it's really hard to say what is happening. And so what I think happens, and I'm gonna circle back to the first slide of why we have contradictory policies, is that the same forces that push for decoupling also push for cooperation. And that's why we see that both policies that accommodate trade and policies that antagonize trade are on the rise. And so understanding really these tensions within each of the dimensions is really important. To stay in 7 minutes, I'm not going to get into that, but it's important to look into each of these dimensions. And then I wanted just to conclude, going back to the firm level, just because when one looks at firm relationships, it seems the firms are very aware of these complexities and of the importance of this accommodation. Here we just see that firms that are more connected internationally, they do better than firms that are less connected internationally, both in the volume of sales and in having a lower volatility of their sales. And interestingly, they do comparatively better since the pandemics or since the, let's say, the Trump wars than before. So let me conclude it here for now. I just threw some ideas for discussion. Thanks.
Thank you again, Daria. And I'm really happy to have three illustrious people here. And I presume you've been introduced already? You have, sir. So let's begin this conversation. You know, we are very knowledgeable and perceptive perspectives from three different angles. But I'll begin with Datuseri Wong. And, you know, if you could help us understand, you know, when I look at the trade data, I look at the most important imports of Malaysia and their integrated circuits. You look at the most important exports and their integrated circuits. So the question I had for you is, what do Malaysian firms do? What are the tasks? What are the components that they produce? And how has their role in these global value chains evolved over time? And I would also like you to talk a little bit about the distinction between the foreign invested firms and domestic firms. So just that's my first part question, which is more about history and evolution and where we are today.
Oh, okay. Sorry, on the left. Oh, sorry. Thank you very much. First of all, before I start, what I like to do is give a quick introduction about Malaysia Semiconductor Industry Association. We got it started in January 2021. Now it's about 2 years, 4 months. And we have 218 members from 10 states in Malaysia, out of the 13 states. And we also have the headquarters coming from about 17 countries around the world. So we have Europe, Asia, as well as Canada and USA. So we have a combination of members. Now, if you look back into how semiconductor started, in 1972 is when it started, and the companies just were using packaging assembly. That's how it all started, low cost. Because at that time, US, Europe were looking for a low-cost country. That's how Malaysia started. And then we added on assembly and test, and then we added on EMS, development of the local offset, and so on and so on. And today, we are here with even more in terms of medical devices now, what Zafrul was saying, Minister was saying. And we have very complex development all the way from just not just manufacturing, but into GBS, global supply chain management, and many types of leadership functions in Malaysia. So we have reached that stage today, very complex. So if you look back in 1972 till now, in 1972, we had about 230 million export. Today, we have 593 billion export. So that is a CAGR of about 16%, and it is doubling every 5 years. So that's where we are. And in the process, as the companies, the FDIs especially, because our strategy at that time was FDIs. So Malaysian companies were involved from the point of, in the beginning, was semi-automation, then become full automation, then they went to precision machining, and getting more and more involved in the complex manufacturing, okay? Because our technology was something like 100 micron, and today we are talking about 7 nanometers or less. And the manufacturing continue to go up the technology chain into the state-of-the-art technology. We are still doing all that in Malaysia, very complex. So the local companies try to keep up with all this technology, and they are very strong in automation. From, as I said just now, semi-automation is mainly just the handling system to full automation, and now they design equipment, they design the whole manufacturing process automation. And WD, Western Digital, has a lights out factory in Malaysia, okay? Last year, they were one of the 6 in the world, and today I understand there are more than 10 of this around the world. So we have one in Malaysia like this. And a lot of the capability in the factory were also helped by our local Malaysian companies in developing systems, software, and automation, although it's not a full automation, but parts of the automation, they are involved in helping WD to be lights out. So we have come a long way, and Malaysian companies have also improved. But however, we still have a long way to go, all right? So now, if you look at it globally, it took more than 50 years to reach semiconductor sales or 550 billion global semiconductor sales. And it's projected that it is going to be 1 trillion by 2030, which is about 7 years from now. Malaysia is at 593 billion ringgit, about 600 billion ringgit. If you're going to keep up with this trend, then we should be at 1.2 trillion ringgit. So the question is Malaysia up to it? Just now we heard the minister says that we are going to, invest, go up the value chain and so on. So yes, we are at a point whereby we should be focusing not just on FDI, but also on the development of local Malaysian companies. And where are they going? So we are very strong already in automation. We are also quite strong in OSAT, which is the outsourced assembly test manufacturing by Malaysian companies. But we are still at a point whereby IC design still at the early stage for Malaysian companies. For the multinational, they're quite advanced. And also the fab, we don't have. So to grow to 1.2 trillion sales of semiconductor by 2030, it is projected that there will be something like 100 fabs need to be built over the 7-8 years. So let's say the forecast is not quite right. We say 50. 50 fabs is still a lot of investment, okay? High-end fabs cost more than 10 billion. The low-end fabs probably 4 to 5 billion US dollars. So Malaysia need to position itself to capture all these opportunities for growth. And we need the local participation, not just the FDIs. So now is a point, I think we have the opportunity to look at how we can further develop the Malaysian companies in IC design, in system design, in embedded system design, as well as attracting a fab. So last time we had a discussion at the ASEAN forum. We said that we need to attract at least one fab out of that 50.
Dr. Sri Wong, I would request all of you not to underestimate. I mean, you cannot underestimate my ignorance. For example, I don't know what fabs are.
Oh, just now the minister said that the supply chain of semiconductor is you start with design, then you do wafer fabrication. In the wafer fabrication, we call them a fab plant. Okay, you make wafers around 200 mm or 300 mm wafers. And then after that, you go to assembly, and then you do tests, and then you end up with embedded system, what you call it, PCBA, printed circuit board, modules, and then at the end, it goes into a product like iPhone and a computer and so on.
I should have had a tutorial on this.
So in terms of value, the IC design and the fabrication is the highest value. Assembly and test has the lowest value.
And those are the things that the Malaysian firms...
We are very good at the assembly and test. But when I say low value, it's very relative. It doesn't mean that it is low. It is still very complex. The technology is still very advanced. And there are a lot of things Malaysia still don't have relative, let's say, to Taiwan, Korea, Japan, and the US. So there are still a lot of things that we need to catch up, even in assembly tests. However, there are opportunities for Malaysian companies to now look at the other two areas, which is the fabrication as well as IC design, due to the opportunity that is created by this US-China trade war and the geopolitical tensions.
So that was my next question to you. How are these recent developments affecting, performance, opportunities, constraints? And I mean, do you see this as, Malaysia primarily benefiting from the relocation of production? Or do you see these, for example, export restrictions that the United States is imposing, which are also, my semiconductor should not ultimately end up, say, in China or something like that. So how do you see the impact on, you see this as, let me say, would it be myopic to see this as a positive development, or are there long-term opportunities here?
It's both opportunities and long-term opportunities, both, I would say. The situation now has created a different scenario for Malaysia. With the US-China trade war, everybody is looking for solutions. And everybody just woke up and realized, especially during the pandemic, Malaysia is one of the critical hubs in the world. We are the top 10 in the world because 7% of the global trade flows through Malaysia, and about 13% of the assembly test packaging capacity are in Malaysia. And if you want to keep up at that 13% level, we have to double our capability over the next 7 years. So during that time, during the COVID time, Malaysia was blamed, that's how it became famous, for not able to ship products, especially for automotive, because a lot of factories around the world have to shut down their factories because the automotive chips come from Malaysia, a high percentage. We have 6 major companies producing automotive chips in the country. And because of that, they blame Malaysia. But then by October, November of 2021, we have already recovered. And we were running 100% of a factory at that time. So theoretically, we are shipping everything already. And on top of that, the factories were expanding in terms of capacity. But even then, people still blame Malaysia, even though we have already done our best, because they have forgotten they are also creating problems, like Taiwan and so on. They also have their fair share of shutdown of factories. So then everybody woke up and felt that, and realized that semiconductor being the foundation of all the things that are happening around us in terms of applications of electronics, digital, what have you, it is the new oil. Semiconductor is new oil. And everyone wants to have a fair share. That's why they talk about onshoring, nearshoring, friendshoring, whatever, in order to have resiliency in the country. And every country is looking for opportunity. Yesterday, I spoke to the ambassador of India. He says India is putting 2 billion. So Vietnam, Thailand, you just name them, Indonesia, China, they are all trying to figure out how to stay ahead in terms of competition. Malaysia has to do the same. Opportunity is now. So factories in China is looking for a solution. They have to move out, of course, of the various conditions that US has placed on the trade war. US also is looking for a solution because they want to ship to China, but then China is also preventing them. So they also have to look for a solution. So it's Taiwan. Taiwan say, I'm caught in the middle. I cannot be just in Taiwan. I got to find a solution. So where would they look at? So we are hoping with the help of the Malaysian government and everybody else, they look at Malaysia. But Malaysia have challenges. That's now you ask me about challenges. We have challenges. We have challenges in ease of doing business. We can be better. We have done a lot already based on the World Bank ranking before. We have done a lot of improvement, still not good enough. We have a war on talent. Now it's a war of technology. You have to keep up and compete. And therefore, all of us have to compete for this global competition in order to win more. And we got to win that one fabrication factory, FDI, I call it, because it's so expensive. Malaysia cannot afford to do it, to bring into Malaysia because they are going to other countries, which Malaysia is not in the radar right now. Thank you.
Thank you very much for this very thoughtful and excellent setting of the stage. And you mentioned that we need to do more on policy. So I'll turn now to Datuk Seri Sham. And, Malaysia has always been proactive, whether it is in terms of its own reforms or whether it's engagement in international relations, international negotiations. I'd like you to tell us a little bit about how has policy thinking on trade in goods and perhaps also in services, how has that evolved? And what do you see as, the role of trade for development? And what do you see as your key domestic reform and international negotiating strategies, especially in this current environment?
Thank you very much. That's a very good question, actually, and take a long time to explain, but it's very complicated. Okay, firstly, in the past, we have about 14 FTAs that we've done for Malaysia, be it bilateral, or regional, or even multilateral. So in the past, it's always been about how we want to be competitive. And we've always looked at market access, on how we can develop our industries and that the industry become strong enough for them to be able to compete openly. Then we open that sector, we liberalize it. And market access has always been the key part in any of the FTA negotiations. But later on, we see other things coming in, like e-commerce and government procurement. But after the pandemic, things have changed actually. IPEF is a game changer. We do not talk about market access anymore. It's about the more important priority things that we need to solve via an FTA type of an agreement or framework. So IPEF is not an FTA, the traditional FTA, but it's a different way of an economic framework. And that economic framework is to solve those problems that we are talking about.
I'll just tell everybody that the IPF, because I'm learning all these things myself, is the Indo-Pacific Economic Framework.
That's right. So there are about 12, 14 countries in IPEF. And China is not there. US is taking the lead. Japan is also very actively in IPEF. And we've had discussions among some of the IPEF members, mostly with the US and Japan. And they're looking at ways on how to solve issues of global supply chain, global value chains, and other non-market access related kind of discussions. So IPEF is different from the traditional FTAs that we've been talking about. So that's a game changer. But for Malaysia, our major trading partners are mostly in this region, the ASEAN region. So in ASEAN, we are not talking about that. Not all ASEAN members are in IPEF. So what's happening now after COVID-19 and the disruptions that's happening, so this has also been a game changer or an eye-opener for government. And in the past, we talked about supply chain. It's about how production and distribution, production and distribution of product from A to Z. That is government's problem. We've always looked at how do we fix problems in the supply chain. There are gaps, so we have policy intervention to fix the supply chain. And that's how we develop our industries as well. In the past, we developed industries from ground up. We brought in anchor companies, and from those anchor companies, we developed SMEs, tier 1, tier 2, and tier 3. So we've been creating that supply chain. And later on now, as we become more advanced developing country, so that industry that we have developed in the past needs to grow and create their own value chain. So they need to go up. So this value chain is more led by the private sector, like industries like Dr. Sri Wong's semiconductor industry. So government's level now at supply chain has actually stopped. So it's now private sector now driving the initiative to discuss about how do they grow their value chain. But after COVID-19, things have changed. So we in government now are trying to figure out also how do we now use policy intervention now to help semiconductor that's happening now. So number one, we spoke about the US-China trade war. Taiwan, for instance. So when we develop our industries from 1960s today, we have actually identified about 27 sectors in the manufacturing sector. But today, we think that the 27 sector that we have developed is just too many, because we need to find niches, we need to find industries that will be able to carry us out of the middle income trap. So the new industrial plan, the new industrial master plan today, it's a risk that we are going to take, where we will be a bit more radical. For the 27 sectors, government cannot carry all 27 sectors anymore. We've built the supply chain, we built the 27 sectors. Now we need them to be independent and they need to move up the value chain. So the new industrial master plan is not going to be like the traditional industrial plan that we've had. So we are going to set some mission, some challenges for them so that then they can meet and develop their own value chain. So that's one game changer that we are currently doing in terms of policy intervention by government. Now, in the semiconductor industry, that's one sector that to us is very, very important, because we have the complete ecosystem now to become one of the major semiconductor producer. Dr. Sri Wong mentioned that we need to have one anchor semiconductor company, then the tier 1, tier 2 SMEs will come in and support that sector. Now we look at Taiwan, and the US-China trade war to us, for Taiwan, that's an opportunity. would companies now put all their money in Taiwan with what's happening? So Malaysia is a good place now for those major Taiwan companies to look at and create their new hubs or major manufacturing facility here in Malaysia. So semiconductor industry, looking at geopolitical changes now, so now we are identifying that semiconductor is one of those from the 27 sectors that we have to now pick and put our focus on. So that's part of the new industry master plan. And your question about government trade negotiations, trade policies that's happening in the FTA. So these are also changing with times. But currently, number one, I hope that after the PRN or Pilihan Raya Negeri, government will be able to put all our focus on now to move the economy. That's one of my biggest hope, because it's so fragmented in terms of getting people together, and now we have to think as fast as the private sector. So that's number one. Number two, once we have the new industry plan, which we hope to launch in September, we need to move very fast, because other countries like Vietnam, Laos, for instance, and even Indonesia, they are all fighting for the same products in that basket. So we have to move very fast. So we hope that the new industrial master plan that we'll be launching in September will help us now become the first mover advantage in this region. Now, the next one is about ASEAN in 2025. I know I'm jumping a little bit, but in ASEAN 2025 is when Malaysia will be hosting ASEAN. Now, this, with what's happening in the disruption in the global scene now, we speak or we talk about deepening our integration and also bring the collaboration among ASEAN closer together, because we see that companies who have very good ecosystem, they have all the integrated companies all located in one area, they survive better during the pandemic. So in ASEAN, in 2025, MITI is now in discussion about bringing this issue of trade and global value chain insecurity and ensuring that we work together among ASEAN first, so that we create an ecosystem among ASEAN, so that we can create a more secure ecosystem among ASEAN members, so that whenever there's another pandemic or another global calamity that happens, we are ready. Currently, we are not ready. What happened during the pandemic was an eye-opener for us. We have no plans. We did not have a crisis management plan that is super proof or foolproof for us to endure another global issue in the future. So that's why government now is trying to learn and doing a lot of scenario planning, so that we can equip ourselves and be ready for the future. And this scenario planning are the things that we are now picking up more the important points, so that we can embed them in some of the future FTAs that we need to put as a chapter in the future FTAs. Not only market access, not only services, not only on agriculture, not only on manufacturing goods, not on e-commerce, but things that can get us ready for future pandemics. Thank you.
If I can just ask you, just to very briefly respond to this question. You rightly said the private sector is going to lead. And this whole question of the greater sophistication that you aspire to, what concrete policies would facilitate? When you say the new industrial plan and the Honorable Minister referred to it, what, if you give us an example, because this is an army of academics, and they need something tangible to sink their teeth into. They're used to thinking of tariffs, subsidies. What is it, the concrete measures that you think would take Malaysia and help the private sector? Is it getting out of the way, as in some countries, like India and Indonesia, there are too many restrictions which make the business environment not friendly? I think Malaysia is already different. So in terms of proactive policies, if you could give some concrete examples of what you think would work.
I mentioned about being competitive, about, you rightly mentioned about tariff, market access, those were traditional. Now, Minister mentioned about prosperity, economic prosperity. So we have to now move away from market access, being competitive now, towards more making the economy more prosper. And prosperity with this Madani concept is also something that we're thinking about and how we can embed that into our new policies. So MITI has now embarked on a radical approach towards moving away from where we were to more radical economic approaches. For example, as I mentioned earlier, in the past, we've always created or developed sectors. Now we're moving away from that. We are moving away from that because we are now telling the private sector that government have done so much in developing that sector. And we have helped in our interventions to make sure that the supply chains issues are resolved. However, in the future, we cannot rely a lot more on government subsidies, government grants, because we have issues on that. We are not as financially prosperous as we were in the past. So we have less financial support for the private sector. But we are looking at ways on how we can facilitate the FDIs that are coming in for them now to also embark on that radicalism that government will be introducing in terms of policies. So for instance, I mentioned about developing sectors. Now we are not going to be developing sectors. We are working with the World Bank now on introducing mission-based industrial policy. So the UK has already embarked on that, and we're looking very closely on that mission-based industrial policy development. So that is something that we hope to introduce in the new industrial policy, which is radical. And we are confident that this approach is going to take us out from this middle income track and move us up from where we are today into the higher global value chain. And we hope that this new industrial master plan will put us or leapfrog the economy and bring us out from that middle income track to where we should be today in a more developed economy status soon, which I hope. Thank you.
Thank you very much. You know, I saved Dr. Ong for the last because I had the privilege of hearing him when we launched the World Development Report 2 years ago, and brilliantly insightful. And now I'm also happy that he was a deputy minister and now he's an academic. So he's seen life from both sides now. So, and he doesn't need to be diplomatic, so he can tell us how has he seen the evolution of both trade and trade policy, and both from the private sector and the government perspective over the last few years. And also, if you can tell us, what do you see as the biggest strengths and the biggest challenges of the private sector in Malaysia, as well as the biggest strengths and the biggest challenges of policy making in Malaysia?
Okay. Yeah. Thanks for the many challenging questions. Glad to be here wearing an academic hat, but with also some experience in MITI. When I was the deputy minister there, Dato' Hisham was the Secretary General, and I'm really glad to see him back at his comfort zone, his base, to be able to drive industry there. Maybe just give me a little bit of leeway to elaborate on one particular policy that Dato' Hisham knows well, which was launched when I was at the ministry, which answers that particular question of concrete policy, which is the Industry Forward or Industry 4.0 policy. And that policy was specifically aimed at the SME community in Malaysia, many of whom were not doing what they needed to do in terms of automation, in terms of going up the value chain from industry 1.5 to 2. Most of them are stuck probably between 1 and 2. And what MITI did during that time was we gave the opportunity for any SME that was interested to undergo a readiness assessment. Basically, get in experts who have been trained in different Industry 4.0 related assessment procedures to give a report for these SMEs in terms of different different quadrants on how they measure up to Industry 4.0 standards. So I think there were about 9 quadrants that were identified, and that report was given to the SMEs. The following step was, after you've done your readiness assessment, you know your limitations and your shortcomings better, you know areas where you can improve more, MITI then gave a matching grant, a readiness assessment, sorry, a business intervention grant, where you could get up to 500,000 ringgit matching grant to identify certain projects that you can embark on to start your Industry 4.0 journey, right? So it was tough going at first. Many of the SMEs did not want to embark on this exercise because they perhaps had not had that strong of a history working closely together with the government on these kinds of policies. But later on, I discovered after a lot of pushing and promotion, especially during the pandemic, that was when they realized this is something that was necessary. They got on board, they got their readiness assessment, and many of them had access to this business intervention. So from an academic perspective, it will be very interesting for academics, including perhaps researchers from the World Bank, to take a look at the profile of these companies, probably sign an NDA of some sort, and then evaluate how many of them went through the readiness assessment, and then how many of them went through the business intervention to get the grants through, and how many of them were successful in doing this kind of business intervention improvements. So that's to answer one question. The question on evolving approaches to trade and trade policy. I think this is one challenge that all ministries face in not just in Malaysia but across the world, which is when the trade negotiators speak to one another, they speak in a certain lingo. Dato' Hisham knows this very well. And it's very technical lingo, but it's important because that's how things like rules of origin are crafted and whatnot. But when these policies have to be communicated to the private sector, that's when the problem comes in, because the private sector does not know how to read free trade agreement text. Maybe a lot of, I think even a lot of civil servants may have trouble accessing those kinds of texts. So I think the challenge then for governments, including in Malaysia, would be to work together with the private sector, work together, for example, a concrete example would be work together with people who provide logistics services, DHL, FedEx and all that, because they know the kind of custom charges that they have to charge for their customers. But if let's say there are changes in the tariff structure, there are changes in the rules of origin, there are changes in the FTA in terms of ratification and implementation, then they would be able to work together with MITI, with government, and communicate these kinds of policy changes to the private sector. Just a little bit more to add. We talk about CPTPP, for example. I'm glad that it's been ratified, and that there's been no policy reversal on this particular policy. Dato' Hisham and I fought hard when we were in the ministry to push for the ratification. And now that it's been ratified, I think the challenge would be not just to communicate the benefits of CPTPP to the industry, but also work together with the different countries on how to implement and deepen and concretize the different aspects of this supposedly higher quality FTA, and it is. So for example, on issues of data localization, CPTPP says that without any exceptions, unless there are carve-outs, there should not be data localization restrictions, right? To what extent has that been implemented in Malaysia, in other countries? I think this is one way in which the trade policy landscape can be better filtered down to the ground. Last question on the strengths and benefits of, I think, the private sector in Malaysia.
I said strengths and weaknesses.
Sorry, strengths and weaknesses. I think we have a very strong FDI community. They have been in Malaysia for a long time. They have been invested in Malaysia and Malaysian talent for a long time. And they do have a pretty good ecosystem vis-a-vis the local suppliers, which has resulted in a lot of companies growing and even being listed on the Malaysian Stock Exchange, including in the E&E sector. Dato' Wong will know a lot of Penang players have been listed and are doing very well. Those are the strengths. I think the weakness would be many of the SMEs who are involved in manufacturing are not able to scale up. are not able to, in fact, get away from their dependence on, let's say, being contract manufacturers for some of the larger FDIs in the country. Right, so for the academics here who may be interested, Dyson, for example, they do a lot of contract manufacturing in Malaysia and in the Philippines. There are a number of Malaysian companies that have been listed as a result of their relationship with Dyson. But the kind of contract manufacturing that they do, many of them have not been able to go out from the lower value chain. And one of them even got into trouble because of some alleged labor practices, labor practice abuses. Right, so that's one of the key challenges, from the perspective of SMEs who are not able to move out on their own. There are some good examples, but not enough.
And I also had a question for you about policy making. What do you think is the strength and weakness?
Yeah, the strength of Malaysian policy making is that it's very consistent. There are a lot of plans and policies that have been published by the different ministries. And of course, the Industrial Master Plan has a long history. Hopefully, the newest one, the new Industrial Master Plan, will not be as voluminous as the ones before. Just to give you an indication, the third Industrial Master Plan was over 900 pages, and it covered like 37 sectors, right? So it had plans for every single sector. And I think that kind of approach is probably a little bit outdated. Going to this mission-focused approach would be much more, I think, innovative, more creative. And then the policy sort of like parameters that you want to push and identify, it goes into different objectives that you want to reach. So for example, if let's say we want to achieve certain levels in terms of sustainable manufacturing, that should cut across all sectors, whether it's E&E, whether it's furniture, whether it's food manufacturing. So those kinds of principles and policies should be implemented across the board, just like what we were trying to do with the Industry 4.0 policy. Right? And this is, I think, something that I would say is currently something that we can improve on, having those kinds of policies that are aligned across industries and also across ministries, which I think MITI, under the leadership of Dato' Hisham and also Tengku Zafrul, is doing very hard on. Probably the most optimistic area I'm hoping for is in the area of policy coordination on the electric vehicle sector, especially with regards to the manufacturing of different components and also services related to EV, not just asking the EV players to come and do CKD manufacturing, but of those cars, but the components and the services involved.
I think that's a very thoughtful response, because especially I'm happy that you mentioned services, because as the Honorable Minister said, it's not what you make, but it's what you do. The distinction between manufacturing and services becoming blurred. And I think one question, so there are two quick questions. One, as economists, we are, and especially trade economists, we spend a huge amount of our energy on tariffs and border taxes. But I think some of the most interesting examples of success in this region are of proactive industrial policies. Now, I think the very nice suggestion from Dr. Ong is that there was an attempt to equip small and medium enterprises to engage in this new industrial 4.0 revolution. And, we are one area where Amit Khandelwal was here. He was a Yale professor. One very interesting piece of work he did was to try and evaluate the impact of assistance that is given to firms, what works and what does not. He worked with Egyptian carpets and Pakistani soccer balls, and that work. Now, if there were an opportunity for, academics here to work, or for the bank to work closely with the government in doing precisely that kind of evaluation, which would provide real-time feedback. And, if we could have the kind of firm level data, which is matched with, for example, trade data. Now, for example, in some countries, we have been able to do remarkably rigorous analytical work including in Vietnam. We have a researcher from there. Indonesia, surprisingly, very detailed data. So that would make it possible to do the kind of credible evaluation which would help you discover which types of treatment, for example, management training has in some research shown to have a big impact on firm performance. So I think the question is, how far do you see, and this is a question for all of you, because it will require collaboration between the government, the private sector, and academics. So we have all three of you here. So question one, in evaluating industrial policy and the proactive policies that you're contemplating, how far is it that you can work with, and you would invite academics and perhaps institutions like the bank to work with you by sharing data, by defining the question, and by actually implementing a treatment in a way that is conducive to evaluation? So that's one big question. The second question is the services sector. Now, Malaysia has benefited enormously from openness to trade and investment in goods, but like many countries in this region, the services sector remains relatively protected. You know, you spoke about the gold standard CPTPP agreement, where Malaysia's commitment was to open its services sector, but with the provision that Malaysia's best interest would be kept in mind, which is a recipe for a high degree of discretion. So one is an area of the persistence of restrictions, which is services. Again, you know, understanding when you talk about empowering small and medium enterprises, you know, access to better services, better finance, better transport, better communication could be critical. So there, the reform agenda seems, at least to an outsider, still incomplete. Then there is the services innovation or the industrial innovation agenda, where you're talking about proactive support. So how do you see, first of all, the scope for collaboration? And if you see political constraints in designing and sharing and working on reform, then how should they be addressed? So I'll start with you quickly. And again, I want brief answers because then we can turn to the academics. So first, if I can ask you, Datuk Seri Esham, to begin and tell us what you think.
On the first question, with regards to the collaboration between academic, government, as well as industry, I think that's already ongoing. Even with the new industrial master plan, we've been working together very closely with the World Bank and also with the industries. I think that collaboration is very, very important to us, especially on what you mentioned about data, because without data, we cannot plan, and we cannot plan and we cannot manage. So that is something ongoing, and that's something that we really encourage, because government resources are quite scarce in terms of experts that we have. Now with all this integrity issue, governance, a lot of government servants are being moved around or rotated. So we in MITI have also lost a lot of good talents and experts in certain fields where they have to be rotated and move around. So that's a challenge for us, and developing officers from to become SMEs or subject matter experts is a challenge now. In the past, it was okay, but now with this rotation, is created a big challenge for the civil service. But with the assistance from the academia and of course from the bank, definitely this will be very good input and support the future government policy making. On the services, for Malaysia, I think the CPTPP is the most advanced FTAs in terms of how we are opening up on the services sector. Now, when we open up the services sector, it's not the government who decide. We need to consult the specific services sector. For instance, the legal, the construction, perhaps and other accountants, for instance. So we need to always engage with them, and we always ask them, "Are you ready to open up on it?" They will. Well, some of them are very professional, and they say, "Yes, we are ready." So we can open up. So that's how we liberalize them, and we write it in the trade agreements. But some of the services sector are always saying that we are not ready to open up because we are not sure where our future lies, and we're not really ready to be opening ourselves up to be competitive. So that's one challenge that we are always facing when we deal or when we discuss with our stakeholders in terms of opening up the services sector. So, but we know for a fact that the contribution of the services sector has been growing in the past, and it has surpassed the manufacturing sector, and we know it's of great importance for us. And even in the CPTP negotiation, in the past, traditionally, we've always gone on negative list approach, but this is the first agreement that we have gone on a positive list approach, where we write down all the sectors whom we can open and liberalize. And those sectors that we cannot open and liberalize yet, these are the sectors whom I think we would welcome inputs from the academia as well as from the bank on how we can help this certain services sector that are not open yet, and for them to understand, yes, it is important for them to open themselves up, maybe progressively over a certain period of time so that they can be ready to face the challenges or competition that they will be facing for us to liberalize. Thank you.
Thank you so much for a forthright and thoughtful response. Dr. Sri Wong, I wanted to hear from you about, how can we work with you and the academic community to help you understand the challenges, and also how help us to also define how the government support would be most effective, both in terms of where it's the government making your life easier by not imposing restrictions or regulation, and where they can provide more proactive support.
Okay, we have been working on this government, public-private academia approach, I don't know, 20, 30 years already.
Has it been a success?
I don't think we have achieved what we want to achieve. It's an ongoing process. And if you ask the industry, they think that they can get a lot more, from the academia. I mean, take an example. Malaysia wants to be a country of innovation. So we have studied many models. All of us, past 30 years have looked at Silicon Valley, look at E3, look at many other countries, how they have changed, how they have evolved. But Malaysia just couldn't execute. We know the models, right? I mean, Silicon Valley, they say the universities are around it, Stanford University, they come out with all the researchers and all the ideas come out of the university, and then they spin off and so on. So my question is, we know, not that we don't know, but we couldn't execute. So how many companies that came out from the university? So just now, the Ong says that EV, we want to focus on services and components. Hey, EV, the idea of EV is what? How many years? 10 years old? So where is Malaysia in the EV development? If you say you want to play with the academia, with the public and the private sector. So we have been focusing in Malaysia on FDIs. Countries like Taiwan, Japan, Korea have been focusing on the domestic development. I think now it's a time for us with this current situation, the scenario that we are in. It's the best time now to focus on our development of our Malaysian companies. How can we put more emphasis to help our Malaysian companies to innovate and grow, become global champions? FDIs, we are good. Double down on it is okay. Continue. We need the technology. We still have a lot to learn from them. But how can we turn this around? So I throw this question to the academia. How can we do it for our Malaysian companies? Last month I took 12 companies to see Bursa, to see the chairman of Bursa, that these people are ready for listing. We have so many companies who are ready for listing. But, they need a lot of funding, they need strategies, they need many other things, to help these companies to develop and really see the big picture and plan ahead. So we need to develop leaders. So in the past, our focus has been technical, trying to work on the low-cost labor. I am an advocate of developing global leaders. If I have more global leaders, I will have the ability to lead the company to a global level. If I have regional or local leaders, they can't get up there. So we need leaders like this. So, for example, School of Business. Where do all these graduates go? How many of them work in Malaysia?
We can ask them
right.
now, actually.
So, you know,
where
why
do you
can't
go?
why can't they lead some of the companies here?
You know, I should tell you that a lot of them go abroad. The
Yes.
number of smart Malaysians in the rest of the world is.
They all go abroad because they always think that the grass is greener on the other side. The other side pay more and more opportunities. I tell you, we have as good opportunities in Malaysia. I can tell you, it is there. We have so many global leaders in Malaysia doing global jobs.
I agree, and I think, you know.
But there are a lot of people don't know.
Yeah.
I'm trying to highlight these leaders because they are based in Malaysia and running global operations, running profit and loss, and not just, they are running businesses as well, not just the operations. We have many like this. So how do we develop global leaders and work with the universities to help these companies to take them up?
I think you're absolutely right, because, you know, just creating skills without opportunities is like pushing on a string. You create unemployed graduates who then either emigrate or protest. But trying to forge new ground without skills is like pulling
Yes.
on a dead.
So
How do you create that virtuous, mutually supporting relationship where skill producing institutions can respond and new opportunities can be created? Now, you wanted, so one person I see as a leader is Dr. Hong, and you have straddled these worlds. So how can we, you know, so, and it's not an accident that we had a leader in the government, a leader in the private sector, and a potential leader who straddles these worlds. How can, you know, we change this dynamic in a way that we create a more symbiotic, mutually supporting relationship? And how can institutions like the bank, the Asian School of Business, other academic institutions, how can we harness their energy and insight and place it at your disposal?
Yeah, thanks. I'm going to answer those questions by giving a few examples. And then after I give the examples, I would give some thoughts on why it is difficult to, that there are some challenges in getting to the kind of collaborations that you were talking about. You mentioned some examples of possible government and academia collaboration in terms of research, and I'll give you three that relates to MITI. The first area that I'll be very interested in, I'm sure that MITI would like to have those kinds of findings as well, is to have access to firm level data where you can measure the extra value added in terms of exports. This is for both FDI as well as DDI, domestic and foreign companies. And the reason why this is important is to be able to link it, this variable to other explanatory variables that you're interested in. So for example, the percentage of foreign labor that are employed. One of the constant demands by the private sector here in Malaysia, both domestic and local, is that they need foreign labor in order to enhance their operations. To what extent does this foreign labor actually contribute to additional value added or not, as the case may be? And there may be other explanatory variables that you'll be interested in. For example, the capital investment per employee. This data is actually collected by MIDA, the investment promotion agency. But again, this is how do you say? It's private data. So you may have to sign an NDA in order to get access to the data. So if let's say that kind of analysis can be done, then you'll be able to communicate this kind of information to the larger public that says, oh, this FDI actually doesn't really bring in that many benefits to Malaysia. It only benefits the foreign companies. But if you say can show that the export value added is actually much higher among these companies compared to others, then you can make that justification. That would be one example. Second example would be in the area of how government grants may be able to assist domestic firms. And this is a question that is, studied all over in terms of the effectiveness of industrial policy, right? Whether it's Korea, Japan, China now, and of course, countries like Malaysia and Singapore. And there is one specific example that I'd like to bring up, which is called the Domestic Investment Strategic Fund, DISF. Dr. Hisham knows this well. An allocation was given, I think, about 200-300 million over a period of time. That's again administered by the Investment Promotion Agency in Malaysia called MIDA. And these were given out to a number of companies with the explicit purpose that they must invest in innovation that would be able to bring about multiplier effects for not just their company, but for the larger sector that they belong to. So if, let's say, access to that data could be given to, let's say, the World Bank and more or even MBA students here at ASB and other places, then you'll be able to do both a qualitative as well as a quantitative study on what were the lessons learned, whether the positive ones, like the ISF money was given to VTROX to improve their visual inspection machines, also given to some companies in the service sector. But of course, there are also cases where the money may not have led to the kind of desired result. So this kind of lessons, should be highlighted and communicated to the larger public. It will also be important information for MITI as well. And then the last one would be with regards to supply chain resilience, right? I wasn't in government during the COVID period, but one of the biggest challenges that government faced, and I'm sure Dr. Hisham also had a sense of this when he was at MOT, was that during the COVID shutdown, you needed to get special permission letters that were issued by MITI if, let's say, you belong to an essential service sector, right? So essential service sector included logistics, included different parts of manufacturing where you manufactured for food and other necessities. But the government was not in a position to be able to evaluate the supportive or the supporting companies and their products that contributed to the essential sector. So for example, I make bread, right? I'm definitely a part of the essential sector. But how about the guy who makes the plastic that supplies me to wrap my bread, right? So he has to prove that he is my supplier. And then what about the people who supply other inputs to that person, right? I see King Tek there laughing because he was one of the people who was roped in by MITI to evaluate and to try to understand whether or not these companies were part and parcel of the critical supply chain. So that data is sitting somewhere in a server. This is under Mari, right? If let's say the data could be accessed and then cleaned up, what kind of how resilient would be some of these supply chains with regards to their connection to essential sectors, with their connection to FDI as well as DDI. And I think this would be very, very rich analysis that would be beneficial, not just to Malaysia, but I think from a global perspective as well.
Sir, these are, fantastic questions which have tremendous research potential and tremendous policy relevance. So it's really great examples.
Maybe one last point. It's very difficult, I think, for the civil service to really have this kind of collaborative exercise because the downside would be that some of these shortcomings are highlighted. Whereas the upside of the benefits may be, not so obvious. So, it may require some political cover. Maybe the minister can sign off, and then whatever blame happens, hopefully the minister will take the bullet for it or take responsibility for it, rather than to pass the responsibility to Dato' Hisham, which I'm sure he's had many sort of like these not so positive experiences in the past, which I'm well aware of. That's one of the challenges.
I think this data, I'll be honest with you, is a big challenge. We had a great meeting with Minister Mustafa also when he was cabinet minister in the EPU. And, it is a problem even for researchers here. Every institution, every university I've been to and think tank, I think it affects the quality of research and it affects the relevance of the research. So I think this is an ongoing agenda. My colleague Yasuhiko and Mei-Ling have been engaging with the government. But I think the questions you identify, and we even wrote a note, which we'll share with you, please. Tobias is there, which is a note which showed the kinds of things, the kinds of policy questions we could ask and address if we had better access to data using a comparator country like Indonesia. So I would share that note with you again, because I think this has to be part of the conversation. But I'd like to give you all, you've been patient. I thought I would turn to you earlier, but I was tempted to ask all these provocative questions. So do you have maybe a few questions from all of you? Since we have these people here, we can keep them trapped for a little longer. Please.
Thank you, Aditya. I think private sector specialist will go back. I just have this. Thank you, Aditya. Yeah, just think private sector specialist will go back. Just very quick question is this FDI has been always a double-edged sword. Like it has given us technology, advanced management, and so on. But same time, when you talk to the SME, they say when they try to recruit the best engineers, the FDIs or guys always got the best guys. So SME cannot grow as a result of that. This is one of the problems going on. But my question is how do we make smart use of FDIs going forward? Yeah. Thank you.
Let's collect one or two other questions. Please be brave. Yeah.
I can talk from here. To President.
Let's hear you more clearly.
Thank you very much to President Wong. Let's play imaginative to have an idea of priority. So suppose that a genius of the lamp comes to you and say, President Wong, I want to help the Malaysian semiconductor industry to meet this 1.3 trillion target for 2030, and I grant you 3 wishes that overnight will happen in Malaysia. The only constraint is no lower taxes, no higher subsidies. What's the 3 things you pick?
Oh,
You know,
just to lay a question on that, I understand your thought process on developing global leaders in Malaysia. So when you look at the semiconductor industry, like the advanced economies like US, they put the number of shortage in terms of skilled technicians and engineers to 90,000, 300,000. India, which is a limited production of getting into limited production of fabs, put it at like around 10,000 in the next few years. How big is the challenge of talent in terms of skills in Malaysia for the evolution of the industry?
Just one more question.
Yeah, just one question on the social aspect of like they are intergenerational workforce currently in the SME space, right? Like the family succession, like all the, I would say, large size SME, right, are owned by family. It's a component, right? It's like a social component. Like how like let's say President Wong, you were saying, how can we move forward? We already know this, right? But there's a gap, like in a lot of like social factors, I think are not factoring in, especially currently is happening right now. Like the people who have resources, how they're gonna like this will link to the private sector question just now. Like how can they really make the decision to like hire data analysts, for example, in SME level? Like if they don't allocate the budget for that, the SME would not skill up because they don't see the need of like hiring this kind of like specific skilled people. That's why the Malaysian brain drain is happening and etc. So I would just like to hear your thoughts from the government, from the private sector, and from the education, like the future education group.
Thank you. So, I'm sorry how long you expected to be here, but this is a great conversation. So if you,
I think maybe we better decide on the time. Otherwise, we can talk for a long time.
Let's talk for a little longer if you don't.
10 minutes? Okay, I'll take a few minutes.
Okay, let's agree. We'll have 10 minutes more. Is that okay? Is that reasonable? Yes.
Sure.
Thank you.
I'll just address the issue on the 3 wishes and the SME impact on SMEs. As I said earlier, our strategy has been FDIs, and I also want to applaud the government for attracting valuable, high quality, strategic and high tech FDIs. Even though Malaysia did not get all the so-called global FDIs into Malaysia, but we actually did get the high quality ones. And it enhances the supply chain. Okay. So you can see that, for example, we got the AT&S, they are doing substrate. We don't have substrate manufacturing here. Now we have a global one. We have Simatech, which is another substrate manufacturing. And then you have Lam Research, who are doing fab equipment. And then they attracted a lot of other suppliers to strengthen the supply chain. So we have that. So that's very good. We should continue. But the issue here is that we attracted so many, and they need so many engineers, technicians, and so on. Where are we going to get them? All right. And if I just now projected that if you're going to double our output from 600 billion to 1.2 trillion over the next 7 years, where are all these talents going to come from? We already have 15 to 20% of our talent leaving the country. There's already a hole. So we need two kind of solution. One is a short term and one is a long term. The short term to help us right through the next 7, 8 years so that we can grow. Okay. And what strategy has been working? If you look at US, you look at Singapore, you look at other countries, you know, they are using other countries' talent. US, in all their design, IC design, when I was in Intel, when they did the 386 microprocessor, 70% of engineers are from foreign countries. They're not Americans. But did they deprive Americans of a job, or they created more jobs? In fact, they created more jobs from 386 to go 486 and so on. And all the latest microprocessors, that journey started. We need to help our companies here to go that path and keep going, because we're going to create more jobs. So you look at the data, you know, the average salary for Malaysian is about 3,000 plus, right? For the semiconductor industry or electronics industry, it's more than 6,000. If you go on this technology path, the wages will be higher. So the question is then, how do we go and support that growth? So we come back to the SME. Every time an investment comes in, SME is the one that loses out the most because they lose their engineers. The other companies, FDIs, are willing to pay 30 to 60% more for the salary. These guys cannot match. If it's 10%, maybe can do it. 20% maybe is a stretch. But after that, it's cannot. Okay? They don't have the margin to do it because they are only, just now we talk about economy of scale. They don't have economy of scale because these guys are all global. Okay, I lose some here, I go and put down here. So they balance out. But so what are the SMEs going to do? So they need help. Where do I go to get the talent? So my only proposal to the government in terms of policy is use the same strategy that other countries are doing, like Singapore. We have Taiwan, we have everybody looking at our talent. They are all here looking at our talent, even including China, trying to hire our people. Use other countries' talent. We got to do it as a short-term measure. In fact, it's not a short-term measure forever. You just do it while we develop our own talents. And to do that, you know, if you look at our quality of education, still a long way to go. We have to get it up to the high level of international standard, you know, just like the PISA scores and so on. And the number of students studying science and engineering is dropping. So all these need to be arrested. These are all the policies that I think the government need to do to help at least the future and to help our local SMEs. The war on talents is going to be strong, and we have to find a way to hold on to our people. I'll just leave it at that. Thank you. I forgot. Okay.
Thank you. So, I mean, FDIs has benefited us where we are today because of the FDI policy that we've had in the past. So some companies are very good. They make sure that the FDI that they invested here, they make sure that they realize them according to to what they have planned. But some companies sometimes there are changes in the plans, in their own supply chain, their own competition, in the global geopolitical changes, and they couldn't realize the full amount which we have already approved for them. So the question on how do we make FDIs better is currently is that we have formed now the National Investment Council, chaired by PM, and the next meeting is this 19th of May. And in this meeting, what we are going to do is that we are going to strengthen MIDA's delivery management unit, where now we are going to follow up on every approved FDIs that we have received to make sure that it's realized according to what it has planned. And whenever there are problems that the company is facing, government will come in and intervene and make sure that we handhold the companies that and they realize to what they have already committed. So that's one way on how we want to make the FDIs better. Now, the other radical changes that we are going to be introducing very soon is how do we coordinate the 31 investment promotion authorities or agencies that we have in this country. So imagine you are an investor, you come to Malaysia and you have 31 investment promotion agencies, and how confusing it can become for investor. So now we are going to be rationalizing that, and hopefully on the 19th, the Prime Minister will be announcing something new on how do we rationalize this and how do we make the investment climate more easier for the investor now to understand, for them to plan, so that there will be certainty for them to now decide on whether to invest or not in Malaysia. And fourthly is that this high profile NIC or National Investment Council that is chaired by the PM is that we need fast decisions, and this council will make that fast decision so that we are competing for FDIs, and companies are always looking for the best in when they want to invest in the country. And when a company wants to invest in Malaysia, their eyes in Vietnam, they will look at, hey, this company is vying for Malaysia. We have to talk to them also. Indonesia will do to them. We'll do the same to these companies. So we must make sure that we catch them early and make sure that whatever that they require from us to facilitate their investment decision, we will fulfill them through this NIC. So this regulatory reform is also something that we'll be focusing on a lot more after this, because the name change in Ministry of Investment shows on the importance on now that we are focusing in terms of making sure that Malaysia continues to become the favorite or favorable investment hub in this region. Thank you.
Just one quick one on the issue of second generation, and I think it's a larger question of business transformation, not just to do with data and whatnot. And I would say I'm cautiously optimistic for a couple of reasons. The first reason is that with the second or third generation, usually these would be people of the business owners who have been exposed to a lot more recent developments, technology trends. Some of them are educated overseas, so they are more broad-minded. And they also have connections in other different parts, other industries. So the possibility for them to value add or up the game in terms of their own companies is actually much higher, including the possibility of hiring data scientists, at a competitive pay. That's one. Second is, I think many more companies, especially those in the service sector, are realizing that data is actually an asset that is underexploited. And with the advent of more professional management in these companies, those that manage to last, some of course don't, then they will be able to try to find ways to monetize those asset streams. So let me give an example. I have a friend who started his own company that's later since been sold off. They dominate the auto insurance processing market. So when you get into a car accident, you bring the car to the workshop. When the car workshop puts in all the applications to get back the claims and all that, it is through this particular company. And they sold that as a service. later on they realized that the data streams that they were getting with regards to where and when the accidents were taking place, in what, and also what period of time, what day of the month, what festival period and all that. Those are all data that could be monetized. And they hired and have been growing a data science team then. So that's another reason why I'm optimistic. And then the third reason is, even if, let's say, you do not develop those capabilities in-house, I think there's a lot of opportunities now for small private companies to offer very specialized data science services. So, for example, I know a friend who started a company called Urban Metry, providing very specific data analytics to do with the property sector, and they sell their services to property companies. So not all SMEs may want to do it in-house. They may employ the services of all these other companies, and this also can build up the data science ecosystem in Malaysia, and hopefully be able to create good jobs and prevent these data scientists from being forced to go to other countries. Yeah.
Thank you very much. We have strained the generosity of our guests. Mailing, before you go, I wanted to first thank you, Dr. Wong, Dato Sri Wong, Dato Sri Isham, Dr. Ong, for a brilliant panel. I would also quickly like to thank our hosts at the Asian School of Business for their wonderful co-organizing and hospitality. My colleagues in the World Bank, especially Shafat Yar Khan, who led this whole event in collaboration with the country management and the staff of the Asian School of Business and the World Bank, who did an amazing job. The academics who've come from all over the region, all over the world, including from here. So you've made this a great conference, and this was the fitting finale. And I hope this is the beginning of a deep and meaningful relationship. I'm going to hand over to the country manager, Yasuhiko, for a final few words.
I was just texting the organizing team. That was the closing remark that I didn't have to give anymore. But that's Sri Sham, that's Sri Wong, Dr. Ong Kian Ming, and the colleagues, thank you very much. And also the colleagues from the Asian School of Business. It's been a very rich 2 days. I wasn't able to attend all of the sessions, but I did attend some of them. And if there's one topic that we're all concerned about and talking about, it's about this topic of the insecurity in the regional global economy and what's going on between China and US, and what's happening to the industries and so on. So that's the hot topic of the day. And I know you know this, but we have spent, for example, World Bank management spent hours discussing this over the last year or so. We don't know the answer, obviously, but it's a question that matters, and answers can make a difference. And it has the policy relevance and informing what people like Dato Sri Sham on a day-to-day basis do. So thank you very much for the collaboration. Some of that I think would require some translation. So just as much as Aditya doesn't know what FAB is, I didn't know what iceberg trade cost was. I looked it up, and now I know. So that the translation function and the World Bank hub here, which is dedicated to knowledge-based support for Malaysia, but also supporting the regional research agenda in the economic area by hosting Aditya's East Asian Pacific Chief Economist's Office, and more collaboration with all the academics in the country and the region and the rest on policy relevant topics like this would be very much welcome, and hopefully it will be informative for all the country stakeholders in the government and private sector as well. So thank you again.
But he looks more respectable.
I already got one.
Thank you very much.
Thank you very much for your insights. It's really quite interesting to see the sort of like duality of policies, right? You open up and then you close at the same time. So the same time that you're negotiating for a free trade policy, wanting to access into CPTPP, then there's also other domestic priorities that you have to.
Yeah. I think it's really. Oops.
Just a quick announcement. Those who came with the bus is waiting downstairs. Please make your way to the bus. Thank you very much. Another quick announcement. The bus is waiting downstairs. Those who are going to Sheraton, please make your way to the bus. Thank you.